Step number 2 will be analysis and step number 3 will be conclusion. Everyone repeat with me, what is step number 1? Basic data. Step number 2? Analysis. Step number 3? Conclusion. What we do in basic data is very simple. When you read the question, now for example, now this is an RTP question, okay? The moment you read this question, look at the size of this question. Okay, hold on, I think. It's starting here. You have a lot of data here. Then you come down, you have more data over here. Then you come down, you have even more data over here. Do you think just by reading this question, you will understand what is happening over here? R more LLP, this, that, etc. So what I have done in this question, if you see on the board, is that I have highlighted certain areas in yellow. Am I right? What are those yellow points? If you read, you will understand that ideally line 1, 2, 3, 4, 5, 6, only some story is written which is not at all relevant from the exam point of view. It's only to give you a background. Then you see that I have highlighted the numbers. For example, what is the first number I have highlighted over here? 5 crore. That number is important. What is the second thing that you see over here? 1 year. So the life of this thing is how many years? 1 year. Like that, in basic data, we will write down all the numbers one by one. Why we do that is because when you read, you will not understand. Understanding the question is extremely important, my dear friends. It's extremely important. Only if you understand the question, you will be able to get the right answer. In fact, I am training from the last 14 years, friends. In the last 14 years, one thing what I have understood is many a times students get less marks, not because they don't know the answer. They get less marks because they do not understand the question. I can give you a very simple proof right away now. Okay. For this proof, I will need two things from your side. Two rules that you have to follow from my side. Rule number 1, you are not supposed to ask your neighbor or talk to your person. You have to do it yourself. Rule number 2, don't use a calculator. Can I give you a task now? Yes, sir. Are you all ready? Okay. Think of any number in your mind between 1 to 9. Don't tell your neighbor. Keep it with yourself. Okay. Thought of a number. Multiply that number with 3. You got an answer? Plus 3. Got an answer? Again multiply with 3. Searching for the calculator, is it? You got a 2-digit number in your mind? Whatever is a 2-digit number, add it together. Don't talk to your neighbor. Okay? Did you get an answer? Whatever answer you have got, plus 2. Now you got another answer. Whatever answer you have got, convert that answer into an alphabet. So if the answer is 1, alphabet will be A. Answer is 2, alphabet will be B. Like that, whatever, if your answer is greater than 26, forget it. Okay. You got an alphabet? If you got an alphabet, think of any animal that you know with that alphabet. If you know, otherwise it's okay. You got an animal? Okay. Whichever animal you have got with the last letter of the animal. So suppose you got dog as the animal, last letter is what? G. Like that, whatever animal you got, last letter of the animal, with that you think of any fruit that you know. If you know, otherwise leave it. Alright. Now let me check how many of you understood the question. Okay. How many of you are thinking of a kangaroo eating an orange? Raise your hands up. How many of you got the answer as 11? Raise your hands up. These many people understood the question. Remaining people, you have to work on the question understanding skills. Put your hands down. Now, shall we get back to the class? Again, friends, let me go back to the same rule number 1. What is rule number 1? Okay. We don't have to understand the logic of this. Let's get back to the class now, friends. Focus. What is rule number 1 and the most important rule? When you write the basic data, why are you writing the basic data? It is to understand the question. Will you get marks for this? No. You don't need marks. If you understand, only then your step 2 will become correct, step 3 will become correct. Your marks lies in step number 2 and it lies in step number 3. Everybody clear with this part? So for example, in the basic data, for example, you have earnings per share as 10 rupees. Okay. Then you are getting the number of shares. Over here you are getting the number of shares as 100 shares. Okay. This is a basic data. Now tell me, the moment you see EPS is turning out to be 10, number of shares is 100, does your brain tell you something? What does your brain tell you? It doesn't tell you anything. It should tell something. Number of shares is there, EPS is there. What does your brain tell you? Total earnings. Your brain should be able to come out with that. That earnings becomes your analysis. So earnings is equal to 10 rupees into 100. That is equal to 1000. Based on this analysis only you can apply the concept. Are you getting my point? So most of the time the requirement of the question, if you want to really understand the requirement, you need to play with the analysis part. But to reach the analysis part, what is point number 1 that you are supposed to do? Basic data. Are you all clear with this part? So in my class, from now till the end of today's day, we will be only working out problems, and all the questions we will work out using one presentation, that is basic data, analysis, conclusion. Everybody clear? This method, one other advantage is that normally students come and tell me, when I read the question, I don't understand which chapter the question has come from. Do you feel like that sometimes? Okay. Now onwards, remember one thing, FM is actually one chapter. Okay. For your convenience, they have broken it up into working capital, leverage, this, that, etc. So don't think which chapter it is from. Think it is FM. Write the basic data, automatically you do the analysis. Then if you read the requirement, you will be able to understand the requirement much better, and there are a very high chance you will be able to get the right answer also. Okay friends. Now today we are going to do RTP and MTP. So when I come to this RTP friends, one important point I want to tell you, overall this RTP is a very good RTP. Okay. Question number 1 is an MCQ, but it is an atom bomb question. Beautiful question. I don't want to start directly with a dangerous question and demoralize you. We will start with easy, take it forward, and then we will go to the advanced level questions once you are adjusted with my presentation style. Everybody clear? So I'll tell you, question number 1 from this exam point of view is one of the best questions on working capital management. 1 and question number 7. 7 is even better than question number 1. Okay. So 7 and 1 are two working capital management questions which actually covers almost all the areas of working capital. It covers cost sheet, it covers raw material management, debtor management, creditor management, cash management, everything. Okay. So mark these two questions are very good important questions from the examination point of view. Everybody clear? And remaining questions are all, that is when we talk about question number 2, question number 3, etc. They are all good, but they are all manageable compared to question number 1 and question number 7. Everybody clear with this part? So shall we now start off, and I'll take a different order of the problem so that we all follow it together and understand it together, and then we will go to the advanced level problems one by one. Shall we begin friends? Okay, let's start with question number 4, leverages. Exam point of view also friends, always start with leverages. It's an easy question. So there is a very high probability that you will get it correct. And one question you get correct, that confidence level is very important for us to go to the next part. Now tell me, when you talk about leverages, there are mainly 3 types of leverage. Everyone tell me, what are the 3 types of leverage that you have? Operating leverage and combined leverage. Okay. Now tell me, operating leverage, how do you find out? Contribution divided by EBIT. How do you find out financial leverage? EBT. How do you find out the combined leverage? EBT. Okay, wait, let me take a blank page and let me do it again. Hold on. How do I go to the next page here? Okay, I'll just do it this way. Yeah. Okay. So I'll just put it again. So we have learned there are 3 types of leverages. First one is operating, second one is financial leverage, and what is the last one? Combined leverage. So when I speak about operating, you again please tell me the formula. It will be contribution divided by EBIT. What is the second one? EBIT divided by, and the last one is going to be contribution divided by. There is one more formula for operating leverage. What is the other one? Percentage change in EBIT divided by percentage change in sales. Whether you take percentage change in sales or contribution, you will get the same answer. I prefer calling it contribution because it's easy. It's just reversing the formula. That's all. Sales also exactly the same thing. Here what will be the formula then? Percentage change in EBT divided by percentage change in EBIT. What about the last one? Percentage change in EBT, or you call it as EPS, divided by percentage change in contribution or sales, because whatever is the percentage change in sales, same will be the percentage change in contribution also. Everybody clear so far? Alright. So if you are clear with this, now let us take this problem and let us do this question together. So first I told you, when we are presenting an answer, we go by 3 steps. What are the 3 steps? Everyone tell me. Basic data, analysis, conclusion. Here there are here you are having 2 companies. What is the name of the first company? A. Second company B. So we'll start with company A. So write down working note number 1, basic data of company A. Online students, I believe even you are comfortable, right? Kirtan, if I want to scroll the chat, anything I can do? This mouse is there here.
Wireless.
Alright. Fine. Did you write down basic data for company A? So now what we will do is, whatever numbers you see in the question, we will copy down. Let it take extra time. You will take maximum 5 minutes per question, friends. But that is the best investment. Do not compromise on that. Okay. So point number A. What have they told over here? Variable cost. Write down point number A, variable cost. Variable cost. Everyone tell me how much is a variable cost? 88,000. Point number B, fixed cost. Fixed cost. Everyone tell me how much is a fixed cost? Okay, so we have variable cost, we are having fixed cost. Then what have they told over here? Write down point number C, interest. How much is the interest expense? 14,000. Then you write down financial leverage. Financial leverage. How much is the financial leverage? 5:1. What is the last thing given over there? Income tax is what they have given. So write down income tax. Income tax. Yes, tell me. So how much is the income tax rate that you get over here? 30%. Do you get the answer as 30%? Alright. So we have written the basic data. Okay. Now we have understood the question. From this basic data, we are supposed to find out the hidden information. Now tell me, when you read through this data, alright, one of the things given over here is financial leverage. What is the formula for financial leverage? EBIT. So for that I need EBIT. And I need EBT. Have they given EBIT in the question? No. How do you find out EBIT? Contribution minus fixed cost. For that, have they given the contribution? No, but they have given you the variable cost and they have given you the, but they have not provided you with the sales. If they have not given you with the sales, for time being, can we assume that sales is going to be X? So I'll put the format of an income statement. Okay. So everyone tell me, how do you put a format of an income statement? First point will be sales minus variable cost, contribution minus fixed cost will give you EBIT, minus interest will give you EBT, reduce tax, you will get earnings after tax. Everybody clear? So let me take the sales as X. How much is the variable cost? Come on, tell me now. See, you are able to correlate better because you wrote down that number once from your hands. It has a better impression on your mind. So now tell me, how much is the contribution that you get over here? Okay, now tell me, how much is the fixed cost? 26,500. So what will be your EBIT? X minus 1 lakh 14. Okay, 1,14,500 is it? Okay, 1,14,500. How much is the interest they have told over here? 14,000. So what will be your EBT now? X minus 1,500. Then you have tax and you have EAT. I think we'll do that later. It's not required to be done now. It will simply complicate things. We already have the formula for financial leverage. What is the formula for financial leverage? Everyone tell me. So it will be X minus 1,14,500 divided by X minus 1,28,500 should be equal to 5 or 5 divided by 1. Once you solve this, will you not get the value of X? Come on, do it on your own from here. Write down and find out the answer. That's not quite, I think. Just a chat I need to check. Right. Okay. Oh, right.
To hear the students, I'll just connect you the Bluetooth and hear you.
Is it? I think
It's fine.
1,32,000. Everybody is getting the same answer? Yes, sir. Perfect. Online students, did you also get the answer as 1,32,000? So the value of X will be 1,32,000. Okay. Once you get X as 1,32,000, can I prepare an income statement for company A now? Yes, sir. Write down the next working note, income statement for company A. Do it yourself neatly, okay, and try writing little fast if possible. But presentation, no compromise on quality, okay. Perfect. The earnings after tax will turn out to be 2,450. Sales you took it as 1,32,000, 88,000, 44,000, 26,500. 17,500, 14,000, 3,500, 1,050, 2,450. All right. All right, friends. Are you all done writing this in your books now? So we are done with company A. Can I go to company B right now? Now you write down the next working note, basic data for company B. Basic data for company B. Okay, come on friends, now do it one by one. What is point number A that you will write down over there? Variable cost. Write down variable cost. Yes. How much is the variable cost? Everyone tell me. 50% of sales. Point number B, what have they given over here? Interest. How much is the interest they have given over here? 11,000. Then they have given you the margin of safety. Friends, what is the formula for margin of safety? 1 divided by degree of operating leverage, or what is operating leverage? Contribution divided by EBIT. So this will be what? EBIT divided by contribution. Okay. So when you write down margin of safety, that time in bracket itself you give the formula. So that way you will be able to correlate better. Understood? So immediately give in bracket the formula EBIT by contribution is equal to 0.25. Okay. Right. Now what is next they have given over there? Income tax rate is given as how much? 30%. 30%. 30%, and finally they have given you the EBIT. How much is the EBIT they have given you over here? 14,000. Perfect. So friends, we have written down the basic data again. Now we have to again go into what? Analysis of company B. So everyone interact with me. From this data, what are the hidden information that you can find out now? Contribution. How do you find out the contribution? EBIT is given and margin of safety is given. So from this we can find out the contribution. Am I right? Friends, I'll just show you how we do it. We'll write down the next working note heading, analysis of company B. Analysis of company B. Analysis of company B. In that what we will do is we will write down Roman number 1, we will write down contribution. There we will write down the formula first. Margin of safety is equal to, what was it? EBIT divided by contribution, or in other words 0.25 is equal to, how much is the EBIT that we got over here? 14,000 is it? Okay, 14,000 divided by contribution. Like this you are supposed to find out the contribution. So I think 56,000 will be the answer. $56,000. Everybody clear so far? Now tell me, once you get the contribution, what else can you find out over here? You can find out the sale value. How is that? They have told variable cost is how much percentage of sales? If variable cost is 50%, contribution also will be 50% of sales. Everybody clear? So write down Roman number 2. Roman number 2, sales. There you can write down, okay, if variable cost is 50% of sales, contribution, not contribution, sales, I think I wrote it correctly, yes. Contribution will also be 50% of sales. Alright? Yes. So once you write down this, Then I'll go to the next part, and here I'll write down below this. Sales will be equal to 56,000 divided by what? 0.5. So do you get the answer as 1,12,000? Once you get the sales, now you can do the remaining part yourself. Am I right? So now you write down Roman number 3, income statement of company B. Income statement of company B. I believe you are preparing the income statement yourself, or are you waiting for me to dictate? Come on, do it. Done already, is it? Did you get 1,12,000 as a sales? Yes, variable cost is how much? 56,000. Contribution? Fixed cost? EBIT? Interest? So EBT? 3,000. Tax? 900, and EAT will be 2,100. Everybody clear so far? Perfect. So we are done with this part, okay, leverage part. Now we will give a heading called as conclusion. Okay, let's read the requirement. What are the requirements that they actually have over here? Oh, they are just asking you to prepare the income statement, is it? Okay, so then what you should do is you should give a heading called as income statement of company A. Tell me, in which working note have you found out the income statement of company A? One or two? It cannot be one. One was basic data, correct? After that in two, right? So whichever working note you found out, just give the working note reference over here. Working note number 2. Same way, income statement of company B was which working note? Whatever working note you have got, maybe if you've done it 1, 2, 3, or if you've done Roman number 1, Roman number 3. If it is working note 4, put it as working note 4, Roman number 3. This is what we call it as conclusion. Okay. Everybody clear with this part? So friends, once you write down like this, understand from the valuer's point of view. As a valuer, when he reads through the answer, he will see the basic data. So he does not have to read the question. Directly in your answer book only the data is available. He sees the analysis. Then he sees the conclusion. Conclusion correctly have given the working note reference. If you write like this, question carries 5 marks, you will get full 5 out of 5. And valuer from the next question onwards, he will do a reverse working. What is reverse working? He will start with the conclusion. He will see working note reference is given. He just has to go and check working note 2 and working note 4, Roman number 3. He gets the answer. You are saving his time. That professional presentation will help you a lot in the examination, friends. Are you all clear with this part? Can we go to the next question now? Okay, let's go to the next question. Question number 5 is a question on capital budgeting. Now friends, new syllabus, they only have capital budgeting. Old syllabus, they had many other topics like sensitivity analysis was there, certainty equivalent factor, and many such areas were there. Everything has been removed. Now it is only capital budgeting. So in the exam, you will have a sure shot question from capital budgeting. Capital budgeting also mainly 2 types. One is normal capital budgeting. Second one is replacement decisions. What do you mean by replacement decision? Old versus new. In your RTP and MTP, they have given questions only on replacement decisions. Alright. Now, shall we do this problem together? Tell me, question number 5, what will be working note number 1? Basic data. Everyone write down working note number 1, basic data. Online students, I believe you are all comfortable. If you have any doubts, just message here. Okay, I am reading all your chats. Okay. Perfect. Basic data. Now friends, we'll read through the question. Focus on the areas that I have highlighted over here. Okay. HMR is considering replacing an old machine with a fully automatic new machine. So you can think of a bike. You have an old bike, selling the bike, and you're buying a new bike. Okay. Old machine had been fully depreciated for tax purpose. That message, what does that imply to you? If it is fully depreciated means, will there be any salvage value remaining for that? So income tax point of view, salvage value of the old machine is going to be, write down point number A. Point number A, salvage value from income tax perspective, from salvage value from income tax point of view, will be 0. Salvage value from income tax point of view will be 0. Everybody clear with this part? Okay. Next one. But it has got a book value of how much over here, friends? So write down. Next point, book value. Book value is how much? 2,50,000. Everybody clear with this part? The machine has begun causing problems with breakdowns. It cannot fetch more than 40,000 if sold in the market at the present point. Wait, I think I used the wrong word earlier. Did I use the word salvage value earlier? Yes, I should use the word WDV. Closing WDV from income tax point of view is 0, not salvage value. Please correct that word, friends. It is closing WDV. Okay, closing WDV is turning out to be 0. Okay, now they are saying it cannot fetch a salvage value of more than how much? 40. So write down present salvage value. That is how much? 40,000. Then they are saying it will have no realizable value after 10. So write down the next point, salvage value after 10 years of old machine. Salvage value after 10 years for the old machine. That is going to be how much? 0. Okay, next. Here, sir. I cannot see.
Okay.
Perfect. Thank you so much. All right. Did you get the salvage value as 0 over here, friends? Okay. After 10 years. Now, company has been offered 1,50,000 for the old machine as a trade-in on the new machine, which is having a price of how much over here? So, friends, that means if I buy the new bike, I will get 1,50,000 for the old bike. Correct? So, net, how much is my extra investment coming in the new vehicle? 4,50,000. So, write down the next point. Write down the next point. Extra additional investment in the new machine. Additional investment in the new machine. Additional investment in the new machine. Right, friends. So, what is the answer you get? 4,50,000. Okay. Now, the life of the new machine is how many years? Write down. Life of the new machine, 10 years. Life of the new machine is 10 years. 10 years. Okay. Now, company has been offered how much value for the old machine? Okay. Okay, I think that's already discussed, right? Sorry. Salvage value is how much given over here? 35,000. Can you write down 35,000 over there now? 35,000. Further, the company follows WDV method of depreciation at the rate of how much percentage? So write down, next point, company follows WDV method of depreciation. But for tax purpose they are using what method? SLM. So write down the next point. Company uses wait, what was the earlier point that you wrote down? Method of depreciation. You wrote down that point, right? Put at the rate of 10% also. At the rate of 10%. Next point you write down. SLM method is used for tax purpose. SLM method is used for tax purpose. SLM method is used for tax purpose. Okay. Next one they have told working capital of how much will be required over here? 50,000. Write down working capital requirement 50,000. 50,000. Okay. It will be released at the end of which year? That write down as a next point. Next point you write down 50,000 will be released. 50,000 will be released at the end of 10th year. This data is very important if you want to crack capital budgeting. Okay. Then they have told given below are the sales and cost of both old machine and new machine. You don't need to copy down this now. Already we have copied down a lot of data. This table is already available. Okay. Now from the above analyze whether old machine should be replaced or not. This is the question. Okay. So now friends, what I will do is I told you we will go by 3 steps. What are the 3 steps? Everyone tell me. Analysis, conclusion. We have written the basic data. I'll give you 1 minute. Read through the basic data and think what are the hidden information you can find out from the basic data. HP, yes, we will provide the recorded session also. Okay, once it's over, we'll upload it and share it with you. Okay, but preferably finish it now itself. Don't go for recorded. In one day it will get over. Otherwise it will keep on postponing and you will not end up doing it. Okay. Come on, read, understand, think what are the hidden information. Done? Shall we discuss now together? One by one. First they have told old machine has been fully depreciated for tax purpose. So what is the salvage value as per income tax? Zero. Is that data relevant or not relevant? Why is it relevant? Friends, at what price are you selling the old machine? When you sell for 1,50,000, your actually WDV is how much? So what is 1,50,000 minus 0? What is that 1,50,000? Or in your income tax language we call it as short term capital gains. On that capital gain you have to pay income tax. Yes. How much is the tax rate they have told over here? 10%. Have they told 10%? Oh, there is some more data here, is it? Tax rate is how much percentage? 30%. So friends, you sell for 1,50,000, your WDV is 0, gain is 1,50,000, on that 30% is equal to how much? You have to pay this tax of 45,000. Is this a relevant data, yes or no? Yes, if you forget this, your initial investment will go wrong. Because what did we take now? 6 lakhs was the cost of the new machine. Minus 1,50,000 of the old machine. Did we get 4,50,000? Yes, 4,50,000 and we have to pay this tax also. Yes, so my initial outlay will become 4,50,000 plus 45,000. So write down working note number 2, analysis. Working note number 2, analysis. Roman number 1, tax impact on old machine. Tax impact on old machine. So here what you will write down? You will write down that WDV is equal to 0. Sale value 1,50,000. So your short term capital gain will be 1,50,000. On the tax will be how much? 45,000. Inflow or outflow? This is going to be your outflow. Friends, my writing is going in a 45 degree. I hope that's okay and readable to all of you. I think now it's better. Yes, friends. Are you all clear with this part now? Yes. Okay, so we are done with part 1. Second thing what they have told is, here the price is 6 lakhs. Okay, life is how many years? Okay, hold on, we'll go one by one. Book value is 2,50,000. Relevant or not relevant? Book value is not at all relevant, because this book value, will you use it anywhere now? Book value was 2,50,000, agreed. That is in accounting purpose. Accounting purpose is just a closing balance, but you are selling it for how much value? 1,50,000. 1,50,000 is the relevant cost. Everyone clear? Then they have told over here 40,000 if sold at present. Is that relevant or not relevant now? Not relevant, because I am exchanging it with a new bike. Okay, if I don't exchange, I will get 40. But now I am anyways exchanging. So I have considered 1,50,000, so 40,000 is not relevant. Everybody clear with this part? Now, other bike they have told 6 lakhs is the price, life is 10 years, salvage value 35,000. Under Income Tax Act, your depreciation will be on what method? From this, can I find out what will be the depreciation under straight line method? So everyone write down Roman number 2. Everyone write down Roman number 2. Depreciation of new machine under income tax purpose. So here it is going to be 6 lakhs minus 35,000 divided by how many years? 10 years. What is the answer you get over here? 56,500. 56,500. So once you get this answer, At the end of the 10th year, you will be getting a salvage value of how much over there, friends? 35,000 is what you will get over there. My question is, in the beginning, we sold for 1,50,000, our WDV was 0. So we made a capital gain of 1,50,000. Like that. Can we find out the gain or loss at the end of the 10th year now? So I'll write down Roman number 3, STCG or STCL at the end of how many years? 10 years. At the end of 10 years. So friends, tell me, what will be the closing WDV at the end of 10 years? What is the depreciation you are charging every year? So it will be 6 lakhs minus 56,500 into 10. Yes or no? Yes. So tell me, what will be your closing WDV? Is it 35,000? Now tell me, what is going to be your salvage value at the end of the 10th year? Is it 35,000? Are you making a gain or are you making a loss? No gain, no loss. Will you have any tax impact over here? No. So what will be your closing cash inflow? Closing cash inflow will be nothing but 35,000 only. So the formula for this would be salvage value plus whatever gain that you have made. But here, since gain is 0, you get the entire 35,000 as your closing cash flow. Please write down this in your books now. Sure, Srihari. In that, is that capital gain thing something new in the investment decision chapter? Okay, wait. I think me using capital gain, is that term creating confusion for all of you? You don't have to use the word capital gain. You can use gain or losses also enough. But if you have learned income tax also, over there you have learned the concept of block of assets. Am I right? As per the block of assets, always depreciated assets will have a short-term capital gain or short-term capital loss only. Okay. But normally in FM they don't use that terminology. They just call it as gain or loss. But I thought of connecting both. That's all. Alright friends, are you all done writing this in your books now? Okay, so we get this. Now my next question to you. In this question, they have told that company follows WDV method of depreciation. Is that WDV method relevant or not relevant? It is not relevant. Why is it not relevant? You are doing cash flows based on only income tax purpose. Depreciation is a cash item or a non-cash item? Okay. In financial management, we always focus only on the cash flows. We don't worry about profit, depreciation, etc. Okay. Accounting depreciation not relevant. Only what is relevant over here? Income tax. Because on that you have to actually pay income tax, which is a cash item. Everybody clear with this part? Okay. So you can write down the next Roman number. Okay. So that we are not having any confusion in our mind. Write down Roman number 4. There you can write down WDV method is only for accounting purpose. It has no relevance in financial management. Alright friends, are you all done writing this in your books now? Yes, so we are done with this part also. This is how you should crack a question. Basic data, understand line by line, clear it up, and then we go to the next one. So friends, until where we have covered, this part is clear, this part is clear, we are clear till here. I think even this part is clear now, right? Okay. Now, working capital requirement is how much have they told over here, friends? Now, that will also be a part of the initial cash flow. Am I right? 50,000. and it will be released at the end of which year? 10th year. I think that part is clear to all of you, correct? Let me go down. Okay, now they have given you one more table over here. Go through this table and tell me what do you understand from this table, or what are the hidden information you can find out from this table. Now tell me, have they given you the annual output? Okay. Have they given you the selling price? So when you have annual output and selling price, from this what can you find out? Total sales. They have given you the annual operating hours, and they have given you the labor cost per hour. From this what can you find out? Total labor cost. They have given you material cost per unit. From this what can you find out? Total material cost. So we can get total sale value, total material cost, total labor cost also you will get, and then what will you get? Indirect cost is directly given to you over here. So ideally from this table can we prepare our income statement? So we can do it for an old machine, then we can do it for the new machine, and then we take the incremental sales, incremental material cost, incremental labor cost, etc. Everybody clear with this part? Okay, so please write down in the next Roman number in your analysis, that is Roman number 5. You can just write down incremental in between cash flows. Incremental in between cash flows. I'll take a fresh page and I'll do it here. Okay, I'll do it here. Okay. Particulars. You are having machine A, then you have machine B. I'll put incremental. Point number A, we will put it as what? Sale value. Point number B will be what, friends? Material cost. Point number C will be what? Labor cost. What else have they told over here? Indirect cost. Put this format and then I will show you how to go ahead from here. Friends, one more thing will come over here, that is depreciation. Depreciation for A is becoming 0. That asset is not there anymore. B, I believe we already got the answer as 56,500. Am I right? Okay. So now tell me, what will be your sale value? How much is 60,000 into 18? Can you tell me? 10 lakh 80,000. What about your material cost? 3 lakhs. What about your labor cost? Let's check it. 2,800 into 50. Do you get the answer as 1,40,000? Indirect cost is also given over here as how much? 1 lakh. So you get EBIT from this, right? Here there is no interest, so I'll directly give it as EBT, earnings before tax. Same way for the new machine, the numbers will be 14 lakh 40,000. Your material cost will be 4 lakhs. Your labor cost will be how much? 2,10,000. Indirect cost will be how much? 1,75,000. Okay. Then you put EBT. Tax. After tax, what will you get? Earnings after tax. And then what will you do? Add back depreciation. So you get the cash flow after tax. Tell me friends, what is the answer you get over there? 3 lakh? No, tell me the final difference figure over here. Do you get the answer as 97,450?
Yes, sir.
Wait, some of you are still writing, let them finish. Alright friends, everybody got the answer as 97,450 now?
Yes, sir.
Perfect. So once you get this as the additional cash flow, we'll go to the next part. From the above information, analyze whether the old machine should be replaced or not if the opportunity cost of capital is 10%. So friends, we need to now summarize and find out what are going to be your initial cash flow, what is going to be your in-between cash flow, and what will be your terminal cash flow. So we'll write down the next working note heading, initial cash flow. Now tell me what and all will come in the initial cash flow. Additional cost of new machine. How much is the additional cost of new machine? Everyone tell me. 4,50,000. Point number B is going to be what? Tax on old machine. How much was the tax on old machine? Was it 45,000? Point number C is going to be what? Working capital. 50,000. So what is the total that you get over here? Do you get the answer as 5,45,000? Then I will write down in between cash flow. In between cash flow. I think this we just found out now. How much is the in between cash flow? 97,450. Next one is what? Terminal cash flow. So how much is going to be your terminal cash flow here now? I think we found out that earlier, right? One is working capital and salvage value. Working capital was how much? 50,000. How much was the salvage value that we found out? 35,000. So do you get the total as 85,000 over there? Okay. So once you do this, you can write down the final working note heading. What will be the final working note heading? NPV. You do this yourself. I'll give you 5 minutes time. So year 0, 5,45,000. Year 1 to 10, 97,450. Year 10, 85,000. 97,450. It will be received every year, right? So year 1 to 10 I have put annuity. Sir, you get little plus or minus, don't worry. Rounding off, don't worry. Many students keep asking me this question. Should I take 2 decimal, 3 decimal? You will get full marks even if you take 2 or you take 3. Unless the question clearly asks you, do it in 3 decimals or 2 decimals. Alright? Focus on conceptual clarity. Because if you're conceptually wrong, you will not get marks. Rounding off, you will never lose your marks. Everybody clear? Okay. So did you all get the answer as 86,500? Yes, sir. Can I go to the next question now? Let's take the next question. Next question is on dividend decisions. Okay. Now, so this question, as we do all the problems, write down working note number 1. Working note number 1. Basic data. Working note number 1, basic data. Everyone look up. Everyone interact with me. What is the first number that you see over here? What is that? 10 lakh? Share capital. What is the second number you see over here? Face value is how much? 10 rupees. Third thing, current market price is how much? 20. Board of directors has the agenda to pay a dividend of how much money, friends? 20. Now here is a twist. Dividend they are paying of how much percentage? 25% dividend is what they are paying. Have they told it is 25% on market price or face value or earnings? Not given. So here actually you can assume it to be 25% of market price. You are correct. You can assume it to be 25% of face value. Then also you are correct. You can assume it to be 25% of EPS also if that is given in the question. Nothing wrong, because there are 3 types of dividend formulas: dividend rate, dividend yield and dividend payout. Your textbook has assumed this to be dividend rate. So we will also do it like this, but in the examination hall, if you take dividend yield, that is with the percentage of market price, your answer is not incorrect. That means your answer is actually correct. Okay, but you have to give an assumption below that. Everybody clear? Next one. They have told the net income will be how much? 5,20,000. Also plans for a capex, capital expenditure of how much? 7,50,000. Desired rate of investment. This is nothing but your KE. So first we will write down this in our basic data. Everyone write down working note number 1, basic data. Working note number 1, basic data. Point number A, share capital. Share capital. How much is the share capital? Everyone tell me. 10 lakhs. Point number B, face value. Point number B is what? Face value. So everyone tell me how much is the face value? 10 rupees. Next point, market price. Market price. How much is the market price? Everyone tell me. 20 rupees. Next one. They have told dividend rate. Dividend rate. Tell me friends, how much is your dividend rate over here? Okay, in bracket you write down, it's assumed to be on face value. It is assumed to be on face value. Alright? Yes, next part. After dividend rate, then I think they have given you the income, that is the earnings. Earnings. Everyone tell me how much is the earnings that you have over here? 5,20,000. 5,20,000. Next part. Company is also having plans for CapEx, capital expenditure. So write down the next one, capital expenditure. Capital expenditure. So everyone tell me how much is the capex that they have told over there? Okay, 7,50,000. Next you write down KE. 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 How much is your KE? Everyone tell me. 15%. Are you all done writing this? Now they are asking you find using Modigliani-Miller approach whether dividend is paid or dividend is not paid. One I will do, one you will do. Okay. So now tell me friends, which one do you want to take it first? Dividend paid or dividend not paid? Even before that we should actually write down working note 2 analysis. But I think here we will do that analysis as a part of the solution itself. Okay. So write which one you want to do first? Dividend not paid. Okay. So I will write down working note number 2, dividend not paid. Okay. All right. Friends, do you know the formula for Modigliani-Miller? What is the formula for Modigliani-Miller? NP0 is equal to P1, that is a new price, into N plus, okay, either we call it as change in N, delta N, or some books call it as M. Okay, if you want to take it as delta N, we'll take it as delta N. Okay, minus I plus E whole divided by 1 plus KE. Okay, so now here basically when we have to solve this, we should go by 3 steps. Step number 1, we should first go and calculate our P1, price next year. Then we should go to step number 2 where we are supposed to calculate our M, and only then we are supposed to solve the equation. Everyone repeat with me, what is step number 1? Calculate P1. Step number 2, calculate M, and then you will go for the equation. So now everyone interact with me. What is the formula for P1 that you have learnt over here? P0 into 1 plus KE minus D. Okay, this we can play around with this formula, or the logic of this formula I will tell you along with the problem itself now. Okay, so how much is the P0 or price that is given over here today? Is it 20 rupees? So it will be 20 rupees into, what is the KE they have given over here? 15% minus D. How much is the dividend that they have given in the question? Okay, dividend not paid, I will take it as 0. So now tell me what is the answer that you get over here? 20 plus 15 percentage will be how much? Do you get the answer as 23 rupees per share? Friends, the logic I will tell you now. Interact with me. What is the price of the share in the last year or current year? It is like today the price is how much? 20. As an investor, your expectation is how much percentage? So if I invest 20 rupees, I should at least get 15 rupees. Sorry, I should at least get 15% return. On 20 rupees, how much is 15 percentage? Everyone tell me. 3 rupees. So if I invest 20, I should get at least 3. What is 20 plus 3? 23. Out of this 23, if the company has given me some dividend, that much I have to reduce because I already got that money in my hand. Everybody clear? Here, is there any dividend? Yes or no? No dividend. So your price after 1 year should be how much percent? How much rupees? 23 rupees. Okay. Now, second step is calculate M, or in your terms we'll call it as delta N. Okay, I'm getting mixed up with the words. Delta N. Delta N means what? Additional shares to be issued. How do you work out the additional shares to be issued? Come again? Finding the fund required. Now tell me how much is a fund required? How will you find out? How much is the investment that is coming over here? Everyone tell me. Okay, apart from this, do I have to pay any dividend as of now? No. Dividend payment is 0. Okay, so my total outflow is 7 lakh 50 minus how much is my earnings that is coming over here? 5 lakh 20,000. So how much is my fund shortage over here? 2 lakh. Do you get the answer as 2 lakh 30,000? Correct. 2 lakh 30 is my fund shortage. And I will be issuing shares at P1, that is 23 rupees. So what is 2 lakh 30 divided by 23? 10,000. So how many shares I am going to issue now? 10,000 shares. Once I get these two numbers, I just have to go and solve this over here. NP0 will be, how many shares are there as of now? 10 lakh rupees. 10 rupees. So right now you are having 1 lakh shares. Okay, I'll just go to the next page. I'll do it. Then you can write it down. So I'll write down NP0 is equal to 1 lakh shares into 20 rupees. That is equal to how much, friends? Do you get the answer as 20 lakhs? Then I will find out P1 into N plus delta N or M. That will turn out to be how much? 23 rupees into, already I have 1 lakh shares, plus I am going to issue how many more shares over there? 10,000 shares. So what is 23 into 1 lakh 10,000? Do you get the answer as 25 lakh 30,000? Perfect. After this, what is the next thing that is coming over there? Okay, so then it will be 25 lakh 30,000 minus the investment of 7 lakh 50 plus the earnings of 5 lakh 20,000 whole divided by 1.15. When you do this, you will get the answer as 20 lakhs. So when I did NP0 also I got 20 lakhs. P1 also I got 20 lakhs. This is when we do dividend not paid. Like this you are supposed to do what now, friends? Dividend paid on your own. Can you please do it yourself? Yes, friends, are you done writing for the second one also? Can you tell me what are the numbers you get? How many of you are still writing? Raise your hands up. Okay, everybody is writing. Please do it. Sorry. If my speed goes up, let me know. Okay, we'll go at a comfortable pace. We'll cover everything with logic. Done? So I was just giving you the summary once again. Here you got 23,415 and the NP0 will be again 20 lakhs and the RHS of the equation also will be 20 lakhs. Hence proven that whether dividends are paid or dividends are not paid, ultimately you will end up getting the same answer. Everyone clear with this part now? Yes, sir. Okay. Anybody still writing? Let them finish, friends. We'll just slow down, let everyone finish. If anyone wants my help, let me know. I just thought of leaving it to you to do it yourself. Okay. Okay, friends, I think all of you are done. Anybody wants my help? No. So, friends, we are done with this one particular question also. Now, I think RTP we have got this one dangerous question to do. Dangerous question we'll do in the end, friends. Let's cover the comfortable one so you all get a grip and then we'll do. 7 is a beautifulest question. It will take minimum 1 hour for question 7. 1 hour for question 1. So 2 hours will go in those 2 questions alone. So let's cover all the other short questions before that and then we go to that one. Now friends, we will do a question on capital structure. This is also a bit confusing because of the approaches involved. You are having value of equity, value of debt, etc. Now let's work out this question. So everyone take question number 3. Write down working note number 1, basic data. Working note number 1, basic data. Now friends, Yes. Here we'll write down first one, capital employed. How much is a capital employed over here, friends? Tell me. 3 lakhs. Write down 3 lakhs. Capital employed is 3 lakhs. Point number B, they have given you the EBIT. EBIT. How much is the EBIT they have given you over here? 45,000. Then they have given you the KE. How much is the KE they have given you over here? 12.5%. 12.5%. Okay. Friends, here I'll give you a few formulas now, and then I will give you a concept on why we use these formulas. If you are using EBIT, is it the earnings after interest or before interest? It is attributable to both equity holders as well as to the debt holders. So here you divide it by KO. If I take earnings after tax, it is attributable to whom, friends? Equity shareholders. Since it is attributable to equity shareholders, here we divide it by what? So this is basically a perpetuity formula. Okay. Even the Gordon's model, that is P0 is equal to D1 divided by KE minus G, is also a Gordon's or a perpetuity formula. If I get time, my objective is to work out the problems. I'll give you one concept in which you will understand this, and with that one concept you can learn the logic of KE, KD, KP, everything, because ultimately everything is nothing but a part of one overall formula. But first let me focus on the problems and complete the problems that I have planned for today. Everybody clear, friends? Okay, yes. So for time being, you understand that we divide by KE because it is a perpetuity formula. Now tell me, here they have given you EBIT, but they have given you the KE. So if I want to find out the value of equity, should I use EBIT or should I use EAT? I should use EAT. So I need to find out the EAT. Am I right? Down they have given you two companies. What is the first company's name? A Limited. A Limited is what, levered or unlevered? Levered means what? You have equity also, you have debt also. Unlevered company means what? Only equity. So when here it comes, you are having 1,50,000. On that, how much is the interest you are having? So how much interest will come over here? 15,000 interest will come. Will that interest come in case of unlevered company? No. So from this, can I find out the income statement for A and B? Write down in your books working note number 2. Working note number 2, income statement. Working note number 2 will be your income statement. Income statement. So here I will write down particulars. Particulars, you are having A and then you are having B. Point number A is going to be EBIT. Okay. Now tell me, how much is the EBIT you get for both the cases? 45,000, 45,000. From this, what will I reduce now? Interest. I think in case of A, it will be 15,000, B, it will be 0. Earnings before tax will become 30,000 and here it will remain at 45,000. Have they given anything about taxes over here? No. No taxes. I'll put the tax as 0. So once you put the tax as 0, what will be your EAT over here? Will you get the answer as 30,000 over here and 45,000 over here? They have given you the KE. How much is the KE they have offered? 12.5%. Okay. From this, can I go and find out my value of equity? What will be the formula? E divided by F. That is a perpetuity formula. 2,40,000 for the first one, 3,60,000 for the second one. Now we can also take the debt value. I think that's already given in the question. Debt value is how much for the first one? 1,50,000. Second one is 0. So here you get the value as 3,90,000 and here you get the value as 60. Alright friends, are you all done writing this? So tell me friends, who's having a better value, levered company or unlevered company? Levered company. Why does levered company have a better value?
Because it consists
Debt. So
it KO reduces.
KO reduces. Value goes up. Okay, now that's all formula driven. Okay, now we talk to a businessman, we cannot go and tell them, debt increases, value goes up. He will look at you and smile. Okay, I just want to show you the practical side of this in reality. Friends, many gold companies, okay, tell me which is your favorite gold company here? 1 minute. What is the name? GR Gold, is it? GR, okay, J, not J, G. GRT, is it? Okay. Friends, normally, I'm not sure what GRT does, but all the gold companies that I have been researching and consulting, what these companies do is, they normally take investments from public. Now, they will open, let us say, showroom number A, showroom number B, etc. To open a showroom, they need an investment of around 5 crore. Alright. Now, if GRT is a very good brand here, people already know about GRT. They go to GRT because of the trust. Now let us assume there is no GRT showroom in Nungambakkam. They want to open a new showroom. The owner of GRT has got a very good brand. He will tell the investors, you come and invest 5 crore, I will give you committed 12% interest on this. Okay. Normally, gold companies, they get an ROI of around 40%. Because once they invest money, they will sell the gold, rotation, they have making charges. 18 karat gold, 22 karat gold, different types of golds are there. They'll charge 8%, 18%, 20%. Diamonds, they go up to 40-50% making charge. It's very high. Okay. So overall, they get an ROI of how much percentage? So 5 crore they will take as loan. They will invest in that showroom in Nungambakkam. On that, they have to pay interest of how much to these people? That is around how many lakhs? 60 lakhs. But they are going to make a profit of how much over here? How much is 5 crore into 40%? They make 2 crore. They pay them how much? 60 lakh. What is the net profit over here? 1.40 crore per showroom. Did they put any money? They do this. And they are able to play around like this because they have a financial leverage. Do you think they can play this game with their own money? There will always be a limitation. Like this, they can open 100 showrooms. Every showroom they open, 1.4 crore extra profit they make only because of the brand name that they have created. This is what they call it as financial leverage. But let us assume GRT's ROI is not 40%. GRT's ROI is turning out to be only 8%. Now, if they take interest rate or loan at 12%, will they be able to survive? Gone. So, normal cases we have a hope that ROI has to be always more than the interest. In that cases only what happened? Leveraging will help you. That's why we work out this financial leverage. What is the formula for financial leverage? EBIT should be more than interest. Only then EBIT by EBT will give you 1 point something as a number. If it is lower than 1 means you are in trouble. Everybody clear now? Okay. So now in this question also you are getting a better value for which company? Levered company. So now what they are trying to calculate over here is that they are telling you if you move from a levered company to an unlevered company. You have a levered company and you are moving into an unlevered company, you can get an arbitrage advantage because already you are getting a higher value in which company? Levered company. So now suppose in this question, I think they have asked you that this fellow is holding how much percent shares in the levered company? 20% share. So now if you sell in the levered, sell here and buy here, you will make some extra profit because you are getting an extra value in which company? Levered company. So everyone interact with me. As of now, what is the value of this levered company that you found out over here? Okay, so of 3,90,000, you are going to sell how much percentage, friends? 20%. So how much is 3,90,000 into 20%? Oh, no. 3,90,000 is the total value, right? Only equity value. How much is the equity value is what you are selling? 2,40,000 into how much percentage? How much cash do you receive over here? You got 48,000 rupees. This you are going to go and invest over here. But in order to keep it constant, here I will also borrow 20% of the total debt value. What is the total debt value that you are having? Of that 1,50,000, how much is 20%? So you borrow another 30,000. Okay, this also you take it over here. So now tell me, when you add up 48,000 and 70,000, total how much are you going to invest in the unlevered company? You will invest 78,000 rupees over here. On this, in the unlevered company, how much is the KE that they have told you already? 12.5%. Did you get the answer as 12.5%? Tell me what is 78,000 into 12.5%? You get 9,750 rupees. This money you get over there, okay? Minus you have to pay interest now. So you have borrowed how much? 30,000. On 30,000, how much interest you will have to pay? Again 10%. So you are getting a 2.5% leverage effect over there. How much is that turning out to be? 3,000. You end up paying 3,000 of interest over here, correct? Now tell me, if you reduce this, how much is the amount that you get over here? Okay, so that is the net income that you get over here is actually 6,750. Had I put this money here itself, on this 48,000, I was getting 12.5%. How much is 12.5% on 48,000? 6,000. I was getting 6,000. Now I have got how much? 6,750. What is the profit I have made over here? I made a clean profit of 750 just by drawing money from the levered company and investing the money in the unlevered company. Can you draw this chart in your books now? Online students, I believe you are all clear with this. Shilpa, what exactly is happening here is levered company already you have a higher value. So that higher value is at which you are selling. So you get more cash over there. This is what you are going and investing in an unlevered company. So there, even though you are investing in an unlevered company, you are getting 12.5% return. Minus for interest you are paying only how much? 10%. So by default what happens? You get a 2%, 2.5% gap coming in between. That becomes your advantage. You can just cross check in a different way if you want. This is actually nothing but, friends, how much is the amount you have borrowed over here? 30,000, correct? On this 30,000, 12.5% return I am getting. Minus 10% interest I am paying. So what is 30,000 into 2.5%? Just check it. It will be the same 750. All right, friends, are you all done with this? Okay, fine. So friends, I believe we are done with levered, we are done with unlevered also. Okay, now this is something what you have to write down neatly in your books. That part I will just show you. You quickly write it down and we go to the next question. Are you all tired, friends? Should we take a... I think I started a little late, so I went on without a break. Now it is, I think, 12:30. Wait. We are doing which question? Question number 3, right? Yes, here. I think we got the first part. Can you just quickly write down this in your books now? This is a proper way of writing from an examination point of view. All right, friends. Are you all done? Writing? Please write down. Exam, you should write down the step manner, but the chart will help you to understand how you take from here, sell it and give it there, so you make the advantage. Okay. We'll do one more final question and then we'll take a lunch break. Is that okay? Yeah. I think we have one more question left in the RTP. We have 3 more questions left in total. The dangerous question, if you exclude that, one more question is left, which is, easily doable. Okay. Those 2 we'll do in the end after we finish everything else, and we'll do it a fresh mind at that time. Okay. Okay, friends. Can I go to the next part now? Okay. Now we have to do a question on cost of capital. Okay. Now, everyone write down working note number 1, basic data. Working note number 1, basic data. Okay. Ready, friends? Shall we start? Okay. Now, first we'll copy down the numbers and then we will go and analyze the numbers. Okay. So here they have given you a table. You don't need to copy down a table as far as the exam is concerned. Just interact with me. 12% debenture. What is the value that is told for 12% debenture? 4,50,000. 10% preference shares? 1,50,000. Equity share capital? 24 lakhs. Now they have told the company's share has a current market price of how much, friends? 30.25. Write down in your books point number A, current market price 30.25. Okay. Next they have told expected dividend. Friends, what do you mean by the word expected dividend? D0 or D1? D1. D1 is turning out to be how much percentage of 2023? 50%. So friends, 2023 down they have given you the number. How much is the number they have told you over here? 3.023. Of that, how much it is going to be? 50%. So write down point number B. D1 is equal to 50% of 3.023. 50% of 3.023. How much is that turning out to be? Can you tell me? 511. Okay. Then they have told EPS of the last 10 years is given. Can you tell me why have they given the EPS for the last 10 years? Growth rate. So friends, here actually you can take the growth in 2 methods. One, you can take from 2014 to 2023. Method 1. Method 2, what you have, RTP has done is they have only taken 22 to 23. So we can give you our assumptions in the examination hall also. So write down the next point, growth. Write down the next point, growth. So what will be the formula for growth, friends? 3.023 minus 723, that will give you an increment from a base of what? 2.723. Around, can I say approximately it's 11%? Everyone got 11%. In bracket you write down a note. Alternatively, we can calculate the long-term growth rate. Alternatively, we can calculate the long-term growth rate We can calculate the long-term growth rate by taking 2014 as the base. Long-term growth rate by taking what? 2014 as the base. Everybody clear with this part now? Okay. Can I go to the next one? Okay. Down they have told company can issue debentures at a rate of how much percentage, friends? 14%. So just write down the next point. 14% debenture has a market price of 99. They have given that also. We'll write down in one shot. 14% debenture has a market price of how much? 99. Has a market price of 99. Next one. They are also issuing 12% new preference share. Am I right? This new preference share is having a price of how much? 9.9. So write down the next point. MPS of market price of 12% preference share. Market price of 12% preference share. Everyone tell me how much is that turning out to be? 9.9. 9.9. And they are paying a dividend of how much rupees per share? 1.25. So write down the next point. Preference dividend. 1.25. Last, they are telling you the marginal tax rate. Marginal tax rate. Tell me, friends, what is the marginal tax rate that you get over here? 50%. So we are done with the basic data. Now I'll give you 1 minute time. Read through the basic data, understand the basic data, after which we will solve it in analysis one by one. Come on. If you want, you can do combined study with your neighbor. Find out hidden information yourself. Dig out hidden information yourself. Come on. Done. Shall we discuss and do it together now? Okay. Friends, one by one. First, they have given you a table. From that table, what are the hidden information you can find out now? Can you tell me? One, EPS. How did you find out EPS? Wait, no. Can we find out the, okay, they have given the share capital is given and the number of shares is given. I think from that you can find out the face value, if I am not wrong. Am I right? Because these are all given at cost. Okay, face value is one thing. Can we find out the weights of each of these things? Like if the total is how much? 30 lakhs is the total. Am I right? And here you will get 100%. So what will be the weight of debenture based on this? Can you tell me? Do you get the answer as 15%? 5%. So the last one will be, so write down working note number 2, analysis. Weights based on cost. Can you please put these numbers and find out the weights yourself? Tell me, did you get the answer? Yes. What is the answer you get over there now? Do you get 15, 5 and 80%? Yes, perfect. So we are done with part 1. Let me go to the second one now. Now friends, they have given you market price as 30.25. Okay. Growth is 11%. D1 also we got it as 1.5 something. From that can we find out? What can we find out? KE. Using which model are we going to find out KE now? Gordon's model. So you can write down Roman number 2. KE using what model? Gordon's model. KE using Gordon's model. Okay. So what is the formula? P0 is equal to D1 divided by KE minus G. D1 divided by KE minus G. So P1 is equal to how much? P0 is equal to how much, friends? How much did you get here? 30.25 is equal to D1 was how much? 1.5 115 divided by KE minus how much percent is your growth rate? 11% is going to be your growth rate. Okay. From this, can you do a reverse working and find out KE on your own now? Okay, so you get the answer as 16%. All right. Once you are done with this, next thing, okay, can I go to the next part now? Okay, next one, let me go down over here. They have told that debentures are currently selling at what price? 99 rupees, and we have got an interest rate of how much percentage? 14%. From this, can I find out KD now? What will be the formula for KD over here? Interest into 1 minus tax divided by the current market price. It's again a formula for perpetuity. Okay. So how much is the interest that you have over here? 14 into 1 minus 50% divided by 99 will give you your KD. .07 is it? Okay. So you will get the answer as 7.07%. 7.07%. Everybody clear with this part? Okay. Now once you get this answer, can I go to the next one? Wait, I think you are still writing. Let everyone finish writing. Perfect. Okay. So once you are done with this, I'll go to the next page. We can now find out KP in the same way. Am I right? Next Roman number will be Roman number 3. We will go and find out KP. KP also they have given you the market price over there. How much is the market price for KP? 9.9. It is 12%. And for that they have given the preference dividend as how much over here? 1.25. So KP will be equal to whatever is the preference divided by the current market price. So 1.25 divided by 9.90. 1.25 divided by 9.90. Do you get the answer as 12.63 percentage? Fantastic. Once you get these three, can I go and find out my WACC? Roman number 4 will be WACC. What is the formula for WACC? KE into weight of equity plus KP into weight of preference plus KD into weight of debt. So it will be 16 into 0.8 plus 12.63 into 0.05 plus 7.07 into 0.15. Okay. Can I go to the next part now? Are you all done writing this? Okay. So friends, once you get 14.49 as the answer for the first one, let us go and read the second requirement now. Okay. Calculate the after tax KD, KP and also WACC. Marginal cost of capital for the new fundraise. We already got this. Now we have third requirement. Listen. How much can be spent for capital investment before new ordinary shares must be sold? Marginal cost of capital remains to be constant. Assume retained earnings available for the next year's investment is 50% of 2023 earnings. Friends, interact with me now. How much is the retained earnings available with us over here? I'll just write down, I'll take a fresh page. Retained earnings is going to be 50% of the earnings of 2023. Am I right? How much is earnings of 2023? 3.023. So I will do 3.023 into how much percentage? 50%. Into 50 percentage into, you have how many lakh shares over here? 2 lakh shares. So can you tell me what is the retained earnings that you get over here? 3 lakh? Okay, do you get the answer as 3,02,300? Now everyone tell me, how much is the weight of equity, how much is the weight of debt and how much is the weight of preference shares? 80% is the weight of equity. How much is the weight of preference shares? 5%. What about in case of debt? You get 15%. Everybody clear with this part? This equity has increased by 3,02,300. Therefore, if you want to maintain the same ratio of 85 and 15, my overall increase has to be 3,02,300 divided by how much percentage? 80%. So what is 3,02,300 divided by 80%? Everybody got 3,77,875. Of that, how much is 5%? 18,894. And what about the debt value? 56,681. This is going to be the additional preference and debenture to be issued. Can you write down this in your books now? Alright friends, are you all done writing this in your books? Fine. So we are done with this part also. Can we go to the final requirement now? Last requirement. What will be the marginal cost of capital or cost of fundraise in excess amount if the company can sell ordinary shares of 22 rupees per share? So now suddenly what has happened? Earlier what was the market price that they gave over there? 30.25. Now what is the new market price they have given? So the moment this 22 comes in, your KE will change. If your KE changes, your WACC will also change. So write down the next Roman number, revised KE. Write down the next one, revised KE. So the formula will be 22 rupees is equal to D1 was 1.115 divided by some KE minus 11%. Alright friends, everybody done writing this? Fantastic. So once you get a revised KE, can I find out a revised WACC now? 17.87 into 0.8 plus other two will remain the same. How much was the preference share? I think you got 12.63 into 0.05 plus last one was 7.07 into 0.15.
15.988.
Approximately, do you get the answer as 16%? Alright friends, are you all done writing this? Okay, so friends, we are done with the major questions of RTP except for two dangerous questions on working capital management. Let's cover all the other questions so that we also build confidence and then we'll go to the advanced level. One more thing friends, exam point of view also, you should do it exactly the same manner. Easy to tough. Never start with a tough question. If you start with a tough question, it's a very big emotional game. See, it's something similar to cricket. If in IPL, first over, one wicket goes down, confidence completely gone. Then the second player will come, even if he is very good, that confidence factor makes a big impact. Exam hall also, first question has a lot of confidence level that actually decides. Friends, when I wrote my FM exam, me and my friend, we both prepared together. He was much better than me. But exam hall, answers went topsy-turvy only because of one wrong decision. He started with an atom bomb question. A 16-mark question came in the exam. I started with a 4-mark question. Alright? So when I started with I in fact started with theory. Being honest, I started with theory because theory you cannot go wrong. If you know what is this, you will write down like that only. So 20 marks some theory was there and then 4-mark questions was there. By the time it was 2:30, I completed 20 marks of theory. Plus I did one 4-mark question. So now look, think of my emotional mindset. 20 mark theory I have written correctly, I will at least get 15 marks. One 4 mark problem question I have done it correct, so I have got 19 marks in the first 30 to 40 minutes of time. Okay, now I have a 2.5 hours remaining for the examination. I have already scored 20 marks. What is the pass mark? I need only extra how many marks now? 20 marks to pass. 2.5 hours is there. Relax and write. That fellow started with a 16 mark question at 2 o'clock. 2:45 he realized answer is wrong. Now think of the mindset, oh my god, 45 minutes are over. I did not even get one question correct. There is a tension, he will start doing others fast and ultimately crumble down. In fact, friends, you have to understand one thing. When you have long questions, you will have multiple working notes. Even though the final answer is wrong, you get marks for every working note in between. Are you getting my point? So don't get panicked like that and start with easy problems. One more advice from my experience of your MCQ, RTP, etc. Don't start with MCQs. It's a new area. Okay? Let's go and try. Okay? The problem with trying is that suddenly you get an answer, you check the 4 options, the answer is not there in the 4 options, so gone. Heart will start beating. Start with things that you already know, things that you have already done. Then you come back to the MCQ and work it out towards the end will be a much better strategy from an examination point of view. Okay. So friends, whatever we did in the morning, was it comfortable to all of you?
Yes, sir.
Alright friends. Are you all done writing till here in your books now? Okay. Now friends, KD or cost of debt. What is the formula to find out KD or cost of debt? There can be redeemable debenture, irredeemable. Here is it redeemable or irredeemable? It's life, etc. is given, so it's a redeemable debt. So in that case, what will be the formula? Interest into 1 minus tax plus redemption value minus issue price divided by life divided by redemption value plus issue divided by 2. Interest, we have taken it as X right now. Am I right? What is the value of debenture that we are having over here? Can you tell me? Sorry, what is the price of 98 is the market price. Face value is how much? 100. It's always supposed to it will be 100 into how much percentage? 1 minus 30% tax. Okay, wait, I think this is confusing. Because we have taken the interest rate as 100x. 100x into 1 minus 30 percentage. 1 minus 30 percentage. This is interest plus redemption value will be how much? They have told redeemable at par. This because you wrote basic data, you are able to correlate. Otherwise, you will never get that. You will forget that one sentence. Minus issue price is how much? Divided by life is how many years? 4 or 6? 4 years for debenture, is it? 4 whole divided by 100 plus 98 divided by 2. Okay, so in other words, this will turn out to be 70x plus how much is 2 divided by 4? 0.5 whole divided by what? 99. Okay, can you write down this in your books now? Friends, are you all done writing this in your books? Yes? Can I go up now? Okay, everyone done, right? So here in this place, what will come now? It will be, what was the number I told you? 70x plus 0.5 divided by 99 into 0.3. So now tell me what is 70x into 0.3? Is it turning out to be 21x? Okay, plus 0.5 into 0.3 will be 0.15 whole divided by 99. I'll keep it like that only, correct? Yes. And what is 0.98x into 0.2? Point 196x. So now we have to solve the equation. So how will the equation go like this, friends? 0.05 plus 0.075 plus 0.196x plus this thing 21x plus 0.15 divided by 99. This should be equal to how much, friends? 0.16. Once you solve it, you get the value of x. That you can put it over here as the interest rate of debenture. I'll put it in a fresh page and do it, friends. Are you done writing with this table over here? Table done, right? Okay, so I'll just come here. This was a very tricky and a good problem. Please tell me once again what are the numbers you will get. 0.05 plus 0.075 plus 0.196x plus 21x plus divided by 99. This should be equal to 0.16. So I'll take these two things on the other side. So I'll get 0.196x plus 21x plus 0.15 divided by 99 will be equal to, how much do you get over here? 16 minus 5 is 11. 11 minus 7.5 will be 3.5. 0.035. So now it will be 21x plus 0.15 divided by 99 is equal to 0.035 minus 0.196x. So 21x plus 0.15 will be equal to 99 into 0.035 minus 0.196x. So 21x plus 0.15 is equal to, how much is 99 into 0.035? 4.5 minus, what about 19.404x. I think then from here it should be easy. So I'll take this on the other side. So what will I get over here? I think 21, I'll get 40.40x is equal to 3.465 minus 0.15. How much will that be? 3.315. So x will be equal to 3.315 divided by 40.4. 8 point? Is it 8.2 percentage? Let me cross check. Yes, your answer is correct. This was a very good question in your MTP, friends. Bank loan will be this into 1.4. How much is 8.2 into 1.4? Everyone tell me. 11.49 is it? 48. All right. So friends, with this question we have done with MTP series 1. I don't think there is any other question left out. Yes, it's done, friends. Okay. Okay. One question I have given you as homework, capital budgeting, because it's exactly the same as RTP. Please do that one question as homework. Now we will do MTP. Ready? So we already have the marathon note here, so I'll continue doing it here itself. Okay. Right. So friends, let's start with FMMTP. Question number 1. Question number 1 is a question on factoring. Now tell me, friends, what is the meaning of the word factor? Who is a factor? He is an agent who helps you to collect funds. Okay, maybe I'll give you a simple example. You all like to watch movies? Tell me tell me some name of 3 people. Okay, one should be a very, very innocent actor. Tell me a name of an innocent actor. Salman Khan. Okay. Now tell me a name of a cunning actor. Kamal Hassan. I'm not sure how is the fan following here for Kamal Hassan. Chennai, I'm very scared to take movie names, I'll take Kamal Hassan for time being as the cunning actor. I have nothing against Kamal Hassan here, okay? Kamal Hassan. Now tell me a name of one villain. Listen to the whole thing, then ask. Yeah? Surya. Is it? Vijay Sethupathi. Okay. I hope the spelling is correct. doesn't matter if it's wrong also. Now friends, innocent Salman Khan has sold some goods to Kamal Hassan. What goods has Salman Khan sold to Kamal Hassan? Tell something here. Drugs. Is there any drug issue going on right now between Salman Khan? Yeah. Assume he has sold drugs for a value of 100 lakhs. Live? That's okay. I'm not taking drugs, no. It's only an example. It's okay. Let's focus back, my dear friends. What was I saying? Okay, Salman Khan has sold drugs for a value of 100 lakhs. How much money Kamal Hassan has to pay to Salman Khan? No, whenever Salman Khan is calling Kamal Hassan to pay the money, either number is not reachable or Kamal Hassan is busy somewhere or he will cut the call. Salman Khan is finally frustrated. He wants to get this money somehow. That is when Salman Khan will go to and he will tell to Vijay Sethupathi that Kamal Hassan is not paying me money, you please help me. So then Vijay Sethupathi will go to Kamal Hassan. He will use his criminal skills and somehow he will collect money from Kamal Hassan. So let us assume he will collect 100 lakhs. After collecting this money, Vijay Sethupathi will pay this money to whom? Salman Khan. Okay, so will he pay the entire money to Salman Khan? He will pay only, let us say, 95 lakhs. Why will he pay only 95 lakhs? Balance 5 lakhs is going to be his commission. So friends, this appointment of gundas to collect money from the other people is legally called as factoring. Okay. In fact, to make this legal, there is an act called as Securitization Act. Is it there in your syllabus now? No, right? It will come at the final level. Don't worry. Okay. In that law, this is mainly for the banking sector. Have you heard about NPA? What's the full form of NPA? There are different types of NPA. Substandard, doubtful, loss. Loss is almost gone category. Whenever something reaches doubtful or loss category, bankers also have gundas with them who go and collect money. Friends, they will be people working in the gym, 7 feet tall, big bodybuilder bouncers they will be. These fellows will just go knock on the door and stand there. Enough, they will get all the money back. Understood? These people do this legally because they come under what act? Securitization Act. They can call, harass those people, no problem at all. If we do it, we will go to jail. They can do it, but this is what you call it as factoring. Now tell me, factoring is good or bad? Ethical point we'll discuss later. Okay. First thing, Kamal Hassan should himself pay the money. He is not paying the money. Okay. Second thing, whether Vijay Sethupathi should go, not go, it's all ethical questions. We are not doing ethical class here right now. My point is, what are the advantages of appointing a factor? Our headache will come down, or can I say that Salman Khan does not need to make any calls, or his cost of administration will come down. Am I right? Second thing, he was having bad debts. Now he will not be suffering any more bad debts. There are two types of factor: with recourse, without recourse. With recourse means if Kamal Hassan still does not pay money, Kamal Hassan commits suicide. Assume, okay, he doesn't pay money. Who will suffer the loss in that case? Salman Khan will suffer the loss. He doesn't commit suicide, friends. Please relax. Chennai very scared to talk about movies also. Alright. What do you mean by without recourse? What did I say? I spoke about with recourse. What do you mean by without recourse? With recourse means if the money is not paid by Kamal Hassan, who will suffer the loss? Salman. Without recourse means if Kamal Hassan doesn't pay the money, Vijay Sethupathi will face the loss. So, where is it more risky for Vijay Sethupathi? Without recourse or with recourse? So, for without recourse, will he charge more commission or less commission? More commission. So, this bad debt savings will come only in case of what, friends? Without recourse. It will not come in case of with recourse. These are the advantages or benefits of having a factor. Now, tell me, what are the cost of having a factor, friends? You have to pay a factoring commission. That is point number 1. Okay. What is the other advantage of appointing a factor? Oh, so what are the other costs of appointing a cost? Okay. There is a terminology called as opportunity cost, or it is the interest which sometimes Salman Khan will have to pay to Vijay Sethupathi. That is the tricky area. I will give you one more diagram to understand that. Okay. So I'll just go to the next page now. Now interact with me. Here you have Salman Khan. Here you have Kamal Hassan, and here you have Vijay Sethupathi. Alright. Salman Khan has sold goods for a value of how many lakhs? Kamal Hassan is supposed to make the payment to Vijay Sethupathi, but this might be happening after, let us assume, 3 months. Today itself, Vijay Sethupathi can give an advance to Salman Khan. Salman Khan will say, see, I don't want to wait. You collect from Kamal Hassan, you give me some money today. So when Vijay Sethupathi is paying advance to Salman Khan, there are some rules involved. For example, he will say, I will maintain 10% reserve. My commission is turning out to be 5 lakhs. Okay, and the interest that he is going to charge is going to be, let us say, 18% per annum. Please repeat with me once again, how much is the reserve he has told? 10%. How much is the commission of Vijay Sethupathi? And what is the interest per annum? 18%. Okay, for timing I'll keep it at 1 year. Okay, now tell me my one question, how much advance will Vijay Sethupathi give to Salman Khan? How do you calculate? Let your answers go wrong. Give me some numbers just for me to understand. Okay, or tell me the calculation. How will it come? What is the total amount receivable? 100 lakhs. Am I right? From this 100 lakhs, now tell me how much is the reserve they have told? So that will be minus 10 lakhs. We can reduce the reserve. Next thing, how much is the factoring commission? That also he will take. What is the balance that you are getting over here? 85 lakhs. On this 85 lakhs, how much interest are they charging? 18%. So what is 85 lakh into 18%? 15.3 lakhs. So once this is paid, only the balance money will be paid to him after even taking the interest. That will be how much? 60? Okay, so he will pay only an advance of 69.7 lakhs. Now friends, some of you might get a doubt. The doubt will be as follows. Why can't I do 100 minus 5 factoring commission? What is the balance coming over here? 95. On that 95, can't I do 10% reserve? Is that right or wrong? Wrong. Why is it wrong? First we have to allocate the reserve. Who told that? We do it like that. Is it? Is there any law which says you should do it like that? Securitization, does it say that when you are giving an advance, you should first take reserve, only then factoring commission? No. Friends, even this is correct. Nothing wrong if we take it like that. In reality, practically, I will tell you what is the scenario. Practically, there will be an agreement between the people which is called as a factoring agreement. Everyone repeat the word? Factoring agreement. In this factoring agreement, they will give the terms and conditions. So, in that they will tell normally, okay, this is the amount. In order to give you advance, I will reduce reserve, then I will reduce factoring commission, then I will take the balance, then I will do into 18%. And then I will reduce even that 18 and pay you the balance money. Sometimes the agreement will not tell like that. In that case, you can in fact do it in different way. 100 minus 5, you get 95. Minus 9.5 will give you how much? 84.5. You can pay this as advance. Take interest after 1 year. That is also correct. So all that depends upon what? Factoring agreement. Unfortunately, they don't tell you this in your classes or in exams. So now what happens is, in your books, nowhere it is given. Exam hall, suddenly you get confused. Should I take reserve first or later? So from exam point of view, you follow this particular approach. Are you all clear? And you have to give an assumption that this is how it is supposed to be done. That's all. Are you clear with the concept of factoring, friends? Okay. Can we start doing a problem now on this one? Okay. Yes. I'm not giving you that in writing. I think that's not required. Okay. Just to explain the concept, I did that. Yes. Now let us do this question. Question number 1. Everyone write down. Working note 1. Basic data. Working note number 1. Basic data. basic data. Alright, now tell me, NV Limited is a manufacturing industry which manages its accounts receivable internally. It supplies articles, blah blah blah. Total sales ledger of the company stands at how many lakhs? 200 lakhs. Write down in your books point number A, total sales. Online students, I hope it's audible to all of you. Yes, point number A, total sales. So how much is the total sales? 200 lakhs. Now point number B, what are they saying over here? How much percentage is credit sales? 80%. So write down point number B, 80% is credit sales. Point number B, 80% is credit sales. Credit sales. Fine. So now tell me, next part. Now they have told company has a credit policy of 2/40, net 120. What do you mean by that? If you pay within 40 days, you will get a 2% cash discount. Normal credit period is how much? 120 days. So write down credit policy hyphen 2/40, net 120. Two bar 40, net 120. Now, past experience has told that out of the total, 50% avail discount and balance are collected within 120 days. So that means 50% people pay within 40 days. Balance 50% pay within 120 days. So write down next point. 50% pay within 40 days. 50% pay within 40 days. And balance 50%. And balance 50% pay within 120 days. Balance 50% pay within 120 days. Are you all clear with this part now? Okay, next one. The finance controller estimated that bad debts are around how much percent of credit sales? Write down. Bad debts is equal to 1% of credit sales. %% of credit sales. Clear, friends? Okay, next part. With escalating costs associated with in-house management of the debtors coupled with the need to unburden the management with the task who has to focus on sales promotion, CFO examining possibility outsourcing, blah 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 blah. Don't read any of that, not relevant. Currently the firm spends about how much percent to administer its credit sales? 2,40,000. Write down the next one, administration cost. Exam hall, they will give so much emotions, you know. This is nothing in costing. CA final, one standard costing question was there. They taught you how to make jam. You know this mixed fruit jam. One full page on how they make jam, marmalade, this mix, etc. Students are reading. Nothing is there. Next page, only basic data starts. Okay, now write down. Did you get this 2,40,000 per annum? Okay. To administer its credit sales. These are avoidable as factoring firm is prepared to buy the firm receivables. The main elements of the proposals are, it will charge how much percent commission? 2%. So write down the next point, total commission. Commission, how much is the commission? 2%. It will pay advance against receivable to the firm at an interest rate of how much percentage? 18%. So write down the next point. Advance will be paid at 18%. At 18% after withholding what? 10% reserves. After withholding 10% reserves. Next one. Company has an option to take a long-term loan at the rate of how much percent? Or may take bank finance for working capital at how much percentage? 14%. There are two things they have given. Either long-term loan, so write down, okay? Long-term loan interest 15%. Long-term loan 15%. Next point. Working capital loan. Working capital loan is how much? 14%. 14%. Are you all done writing this? So friends, we are done with the basic data. Okay. Now, I'll give you 1 minute time. Read through the basic data. Think what are the hidden information. Come on. Ready? Shall we discuss together now one by one? First one. Friends, 200 lakh sales is given. 80% is credit sales. From that, what can you find out? Can I find out the credit sales? So write down working note number 2, analysis. Working note number 2, analysis. In that you write down Roman number 1 will be what? Credit sales. How much is the credit sales? 80% of 200 lakhs. So do you get the answer as 160 lakhs as the answer for the first one? Okay, next part. Then they have told past experience shows 50% avail discount and 50% pay within 120 days. From that, what can you find out now? Can I find out my average collection period? Average collection period, that will be 120 days into 0.5 plus what? 40 days into 0.5. So when you do like this, what is the answer you get over here? 60 and 20. Do you get the answer as 80 days? Now tell me, if your average collection is 80 days, from this, can I go and find out my average sundry debtors? How do you find out your average sundry debtors? What is your total credit sales? 160 lakhs. This is for 1 year. My receivable is blocked for how many days? 80 days. So this into 80 divided by 360. I think 1 year should be equal to 360. They have told in the question. Just read. Yes, 1 year is 360 days. 160 into 80 by 360. So what is the answer you get over there? 30? 35 lakh. Tell me in full without rounding off. 35 lakh 55,556 rupees. Okay. Okay. Alright friends. So once you are done with this, can I go to the next part now? Are you still writing? How many of you are still writing? Just raise your hands up. Okay. I think all are done. Next part friends. So once you are done with this, the finance controller has estimated that the bad debts losses are around how much percent of the credit sales? From this, can I find out the bad debts? How much will be your bad debts? Do you get the answer as 1,60,000 rupees? ₹1,60,000. We can find out one more thing over here friends. Can I find out what is going to be my cash discount? That is 50% people are going for 40 days. Am I right? So when I look at it in that way, 160 lakh is the total. Of that, 50% people are paying within 40 days. To them we are offering how much percent cash discount? 2%. Into 2%. So 80 into 2% will be how much? 1,60,000. This is your cash discount. Okay, I believe all of you are done writing this. Can I go to the next part now? Okay, friends, now let me read the remaining part of the question. 80% credit sales, credit policy, 50% done. Now they are saying that the firm will have to spend 2,40,000 on administration cost also. Okay, these are avoidable as the factoring firm is prepared to buy the firm receivable. Factor is charging a commission of how much friends? 2%. From that, can I find out the factoring commission? Factoring commission will be 160 lakhs into 2%. Do you get the answer as 3,20,000? $3,20,000. Okay, next part. Can I go to the next part now? Right. Down then they have told it will pay to the firm an interest at the rate of 18% after withholding how much percent reserve? 10%. Okay, shall we do that now together? Tell me what is the order that we are going to follow. I just told you the order now. So I'll write down advance. First I will take what? Point number A will be what? Whatever is my receivables, because that is what they are going to give me as advance, correct? How much is my receivables? Everyone tell me. 160 lakh is not my receivable, that is my credit sales. 35 lakhs, 55,550. This is my debtor. This is what I will get as advance. I will not get my credit sales as advance. Everybody clear? Now, if this is your receivable, from this first I will reduce what friends? 10% reserves. How much is 10% of 35 lakh 55 556? 555. Okay. After this, what will I reduce? I will reduce my factoring commission. Everyone tell me how much is my factoring commission? Wrong. It is not 3,20,000. Why? 2,56,000. Wrong. 71,000. How did you get that number? Excellent, friends. Give her a good clap, everyone. Friends, this commission is for 1 year. but I will receive debtors every 80 days. So I will only reduce the commission for 80 days because next advance will come after 80 days. That time again I have to reduce the factoring commission. So here the formula would be, you can put this with a reading pen because students make mistake here. 3,20,000 into 80 divided by 360. So I think you will get the number as how much, friends? 71,111. Okay. Once you reduce this, can you tell me what is the balance that you will get over here? Is it 31,28,889? On this I will be charging interest at the rate of how much percentage? Do it and tell me how much interest will come. 563, 200. Your answer is wrong. Into 80 divided by 360, my dear friends, because this interest you are taking only for 80 days, not for 1 year. 31,28,889 on that 18 percentage into 80 divided by 360. 1,25,000. So once I reduce this, I will know the balance advance. How much is that turning out to be? 30,03,733. Alright. So are you all clear with this part now? This is a very good question, friends. This one question we do it correctly, it covers all the areas. Now friends, we got the advance. Everyone interact with me. What are the advantages of appointing a factor? Can you tell me? I'll just write down the next one. I'll call it as Roman number 8. Cost benefit analysis. Okay. Now tell me, what is the first merit of appointing a factor? Can you tell me, friends? You are saving administration cost. How much is the administration cost saved over here? Can you tell me? 2,40,000. Second thing, we are going to save what? Bad debts. But this will come only in case of what, friends? Only in case of without recourse. So we are assuming it is a without recourse arrangement. How much is the bad debts that we found out earlier? 1,60,000. So these are the two advantages. So when I add up these two things, do I get the amount as 4 lakhs? Okay. Now tell me what are going to be my cost. I have to pay factoring commission. Everyone tell me how much factoring commission I have to pay now. Do I have to pay 71,000 or 3,20,000? Now you will take 3,20,000. Not only this, you have to pay interest also. Am I right? How much interest you have to pay over here? 5,63,200. Correct? So can you tell me what is the total cost that you are getting over here? Is it 8,83,200? So from this, can I say that I am having a net loss or net cost of appointing factor? Can you tell me how much is my net cost of appointing factor? Is it 4,83,200? 4,83,200. So friends, this cost I am paying because I receive an advance in my hand today. Am I right? How much is the advance I received today in my hands? 30 lakh 3,733. So indirectly can I say I pay 4,83,000 because I received how much money today? 30 lakhs. From this we can find out the effective cost of factor, or the formula for this will turn out to be A divided by B. A divided by B. Do you get the answer as 16.08%? Or the logic I will give you in writing below this. The logic goes like this. I received 30 lakhs today. Due to this, I paid 4.83 lakhs. This is similar to interest, which is 16%. Now tell me friends, this fellow from bank, he can get a term loan at 15%, working capital loan at 14%. So which is better? Bank loan is better or factoring is better? Bank loan is better. I think I'm going a bit fast. You write down, then I'll repeat the whole thing. Relax and write down. Alright friends, are you all done writing this in your books now? Are you still writing? Write down. Should I zoom it? 1 minute. I hope you have written before this part. Sure, no? Okay. Anybody still writing? Please raise your hands if you are still writing. Let them finish. Scroll down, is it? This is the last part here. All right, fine friends. So I believe all of you are done writing this. Okay. Now friends, let's read the requirements one by one. What is the first question over here? Everyone tell me. What is the average level of receivable? Come on, tell me what is the answer. So what is the answer? Answer should be B. Fantastic. What about question number 2? How much advance the factor will pay against the receivable? Fantastic. You got the answer for the second one also. We still have 2 more. Let's wait. Third question. What is the annual cost of factoring? Come on, tell me. 4 lakh. Hold on. Relax. Okay, wait. This is a tricky problem. We are doing question number 3. Am I right? The answer given in your books is 8,83,000. Let's just cross check. What is the annual cost of factoring to the company? It's not percentage, it's cost. So when you correct. These two are the costs. So what you're saying is right. It will turn out to be how much over here? 83,200. Next one. What is the net cost to the company on taking on the factoring service? 4,83,200. And what about the last one? What is the effective cost of factoring? Come on, tell me. So friends, when you put basic data analysis correctly, MCQ answers will come by default, because if you understand the questions, answers will come automatically. So MCQ is easy, but it is the same thing that you did before. Earlier you were just solving the whole answer. Now from that answer you are picking and putting what? MCQ answers. As simple as that. Okay, can we go to the second question now? Perfect. Ramu Limited. Let's do it together. So question number 2, working note number 1, basic data. Wait, there is a doubt online. Can we take factoring commission as receivables into percentage? Okay, with whom? TT, yes. You can do receivables into percentage, then you get factoring per 80 days. So whatever answer you get like that, you have to multiply into 360 by 80. You will get the same answer. You can do it like that. Okay. All right, friends. Please keep quiet. Now, Ramu Limited, quiet. Ramu Limited wants to implement a project for which 25 lakhs is required. So write down point number A, fund required. Point number A, fund required. How much is a fund required? 25 lakhs. For which they have the following options available in front of them. What is the first option? Everyone tell me. So write down point number B. Option 1, 100% equity. Option 1, 100% equity. Next point, you write down option 2. Now tell me, option 2, is it 100% equity? No, it is having a mix of equity, preference and debenture. So write down option 2 hyphen mix of equity, preference and debenture. Preference and debenture. Are you all clear with this part now? Okay. Next one. Fine. So once you have written this, now they are asking you what is the indifference point and EPS at that level of EBIT, assuming the tax rate is 35%. Indifference point. What do you mean by the word indifference point, friends? Point where 100% equity is final answer is going to be equal to the answer that you get under. So option 1 should be equal to option number 2. So they are asking what is the indifference point and EPS at that level of EBIT. Have they given the EBIT in the question? No. So let me take a fresh page. Listen carefully, then you write down yourself. Okay, ready? So we are having two options. One is option number 1, other one is option number 2. Option number 1, let us assume the EBIT is equal to X. Option 2 is also X. Option 1, will you have any preference dividend or interest or anything? No. But in option 2, interest will be there. How much will be the interest? Can you tell me? 10,000 into 100. How much is 10,000 into 100? 10 lakhs. On 10 lakhs, how much is the 10% interest means? 1 lakh. So here you have an interest of how much coming in? 1 lakh. So here from this we can find out EBT. EBT will be X over here. Here it will be X minus 1 lakh. On this what will come now? Tax. How much is the tax they have told? 35%. So it will be 0.35X over here. Here it will be 0.35X minus 35,000. So now tell me, once you do this, what will be your earnings after tax? 0.65X, and here it is turning out to be how much? 0.65X minus 65,000. Am I right? Okay. Once you get this, then what will you reduce from this? Preference dividend. So how much is your preference dividend? Can you tell me? I think they have told in the question as how much? 5,000 into 100 is 5 lakhs. On 5 lakhs, 12% will be how much? 60,000. Oh, option 1 it will not come. Thank you for letting me know that. Okay. So here it will be 0. Here it will be 0. Okay. Now, so once I reduce this, I will get my earnings to equity holders. So that will be 0.65X over here. Here it will be 0.65X minus 1,25,000. This, if I divide it by number of shares, I should be getting my EPS. Am I right? So how much is the number of shares I have in the first case? 25,000. Second case, what is the number of shares I have? Only 10,000. So here you will get 0.65X divided by 25,000. Here you will get the answer as 65X minus 1,25,000 whole divided by 10,000. These two answers should be the same is what they are trying to ask you. First, can you write down till here in your books? Then we'll create an equation. Alright friends. So from this, can we create an equation now? What will be the equation that you will have? 0.65X divided by 25,000 is equal to 0.65X minus 1,25,000 divided by 10,000. On cross multiplication, you will get what? 6,500X is equal to, how much is 25,000 into 0.65X? How much? 16,250X minus what? Oh, that will be a very big number. 250 lakhs. 1, 2, 3, 4, 5, 6 zeros. Fantastic. So now I think when you do this, you will get 9,050X is equal to 3125, 1, 2, 3, 4, 5, 6. So what is the value of X that you get over here? 5130. 3. That will be your EBIT. Did everyone do it? Yes, friends. Are you all done writing this? Now. Okay. So let's go and check the question now. Here the first, there's only one question over here. What is the indifference point and EPS at that level of EBIT is what they are asking. So friends, what is the number that you got over here? 3,20,513. So tell me which one is going to be your answer over here? Oh, it can be B or it can be D. For that we need to go and find out the EPS. Beautiful. So friends, finding the EPS is very easy. Can't we just put 0.65x divided by 25,000? Okay, so you can just 1 minute. So it will be 0.65 into 3,20,513 divided by 25,000. Do you get the answer as 8.33?
Yes, sir.
So here your answer is going to be this one. It will be B. Done. Okay. Clap in the end we'll do. Okay. Let's focus on the questions now. Can we go to the next one now? Okay. Yes, friends. Now we'll go to question number 3. Come on, this you can answer yourself, okay? I am giving you 1 minute time. You tell me the answer yourself. Let everyone think and give me the answer. Alright. Tell me how many of you say the answer is A, raise your hands up. B, raise your hands up. C, raise your hands up. D, raise your hands up. Your answer is right. It is 1.15. How do you do that? Give yourself a good clap, everyone. How did you do that? 6.9% divided by, because it is percentage change in EPS divided by percentage change in EBIT. Everyone clear? So that will give you the answer as 1.15. Fantastic. Now friends, last question is a theory question. What is the maximum period for which company can accept public deposits? Come on, tell me. 6 is maximum or minimum? My dear friends, that is minimum. Maximum is 3 years. Don't go wrong there, okay? Maximum is 36 months is 3 years. It is actually from 6 months to 36 months is the period for public deposits. Everyone clear? So we are done with this and we are done with the MCQ of the of what do you call it? MTP. Okay, right. Shall we go to the problematic areas now? Yes. Friends, this is a very good question on Walter's model. Tell me what is the formula for Walter's model? D divided by KE plus Walter's model.
D1 minus D1.
Oh, you have learned a different formula here, is it? Hold on. D plus minus. You know a formula, right? Okay. I teach a different formula. Let's not mix up. You solve it your style. Okay. I solve it myself. We both should get the same answer. Okay. Deal? Right? Fine. Write down working note number 1, basic data. Working note number 1, basic data. Come on friends, can you copy down this table in your books now? Tell me your formula again. D plus R by KE, open bracket. After this open bracket, is it? This was a closed bracket, sorry. Okay, open bracket. Okay, same thing. I was just writing it in a different way. I was writing D plus E minus D into R by KE whole divided by KE. Simply you confuse me. I thought you have come up with some new derivative formula. Okay, here I do it like this. I put D by KE plus, I put it this way. Okay, so you just take and you made the KE common and you have worked it out. Okay. Write down these table numbers in your books now, friends. Come on. So friends, this is R. This one is KE. Alright, now tell me, friends, they have given you the net profit as 54 lakhs. How much is 12% preference dividend on 200 lakhs? Do you get the answer as 24 lakhs? Am I right? So I'll just take a fresh page and write down here. Okay, I'll do it over here. So friends, first I'll write down the net profit. Everyone tell me how much is your net profit? Is it 54 lakhs? 54 lakhs. Minus, I will reduce the preference dividend. Tell me friends, how much is the preference dividend that you have? Is it 24 lakhs? So what is the earnings available to equity holders? Equity holder will be how many lakhs? 30 lakhs. What is the number of shares that they have over there? 2 lakhs. So what is your EPS? Is it 15 rupees per share? 15 rupees per share. Alright. So this is what we call it as E. E. Okay, ready? Now friends, if 15 rupees per share is E, now what they are asking us over here is to find out what should be the dividend payout so that your price can be 120. So everyone interact with me. Walter's model, what is the formula? 120 is equal to D plus R by KE. How much is the R in our case? 22%. 0.22 divided by what? 0.15 into what? E minus D. How much is the E that I have over here? Minus D whole divided by what? 0.15. Once you solve this equation, you will be ending up to get the answer of D. Can you do this yourself now? Alright friends. Alright friends, tell me, what is the value of D that you get over here? 8. 1 minute. Okay. Do you get the answer as 8.557? Therefore, your payout, how do you find out your payout? That will be your DPS divided by EPS. So that is 8.57 divided by 15. So when you do like this, what is the answer you get over here? Is it approximately 57%? Perfect. 57%. How many of you are still writing? Raise your hands up. All of you are done? Perfect. Can I go to the next question now? Okay. So we are done with this question also. Let's go to the next one. Okay. Capital structure of AN is given below. 50% debt, 50% equity. So write down question number 1B, working note number 1, basic data. Working note number 1, basic data. Point number A, debt equity ratio. Point number A, debt equity ratio. Point number A, debt equity ratio. Everyone tell me how much is the debt equity ratio over here? 1:1. Now they have told borrowing rate is how much percentage? 10. So write down point number B, interest. Interest. Everyone tell me how much is the interest that you get over here? 10%. Okay. Now, if R owns 8% of the equity share of AN, determine his return if the company has a net operating income of 10 lakhs and the overall capitalization is how much, friends? 20%. Now tell me, friends, what do you mean by the word net operating income? EBIT. So when I take EBIT, is it before interest or after interest? So in that case, what will be your denominator? You will divide it by what? KO. So from this, can I find out the overall value of the company? Correct? Write down in basic data itself, point number C, overall value of the company. Overall value of the company. What will be the formula for overall value of the company? 10 lakhs divided by 20%. 10 lakh divided by 20%. $10 lakh divided by 20%. So, do you get the answer as 50 lakhs over there? Okay. Out of this 50 lakhs, how much is going to be equity and how much is going to be debt? So write down the next point. Proportion of equity. proportion of equity. Proportion of equity. Okay. How much is that turning out to be, friends? 25 lakhs. Write down the next point. Value of debt. Value of debt. Value of debt. Tell me, friends, how much is the value of debt that you get over here now? 25 lakhs. On this debt, you have to pay interest right now. Write down the next point, interest. Write down interest. Interest. Now, everyone tell me how much is the interest that you get over there? 2 lakh? Okay, interest will be 2,50,000. Okay, right. Now, if 2,50,000 is the interest, hold on. (50/50) borrowing rate is given as 10%. Okay, now tell me, once again interact with me. How much is the net operating income? Everyone tell me. From this 10 lakh, how much is going to go as interest? 2,50,000. So can I find out my earnings before tax? There only you do it. Write down the next point, earnings before tax. Earnings before tax. Yes, friends. How much is your earnings before tax that you get over there now? 7,50,000. Okay, right. So you are getting 7,50,000 on an investment of how much over here? I'll take a fresh page. 1 minute. So I just write down over here. Everyone listen carefully. So you got the that is 7,50,000 after tax or before tax?
Before tax.
But here the tax is 0. Okay. So your earnings is turning out to be how much over here, friends? 7,50,000. What is the value of equity that you already have in your question? From this, can I find out the KE right now? Or how much is the KE that you get? 7.5 lakh divided by 25. So what is the answer that you get over here?
30%.
Do you get the KE as 30%? Perfect. Write down, and I think we are done with this question. They were asking for implied required rate on equity. We found out overall everything is done. So in basic data itself, we finish it off. In exam, you can just break it up into analysis and conclusion also. Okay. You want to see the question? Alright friends, are you all done with this? Can I go to the next question now? Okay, so we are done with this problem also. Okay, 1A done, 1B done. Okay, now 1C is what we have to do. Friends, listen carefully. 1C is a question on ratio analysis. So this question, to solve it is very easy, provided you know how to crack the ratios. Okay, listen carefully. What is the presentation methodology? I have told you already. Basic data, analysis, conclusion. So in basic data, what are you going to do now? You will write down this entire thing. Okay. Now please interact with me, all of you. Equity capital is given. Current debt to total debt. What do you mean by current debt to total debt? Okay, so this is basically total complete liability. Total debt to equity share capital is given as how much over here? 0.6 is given. So that means if equity is 1, your debt is going to be 0.6. So here the formula would be what? D divided by E. Everyone clear? Fixed assets to equity capital means what? FA divided by E. Okay, total asset turnover, what is the formula? Turnover divided by assets. Okay, what do you mean by inventory turnover? What is the formula? Turnover divided by stock. So friends, turnover divided by stock. Here it can be closing stock sometimes it will be average stock. Okay, here since nothing is mentioned, we'll assume it to be the closing stock. So once you put these things, they have given you the equity capital. How much is the equity capital?
2 lakhs.
From that 2 lakh, if I go and apply the debt to equity, can I find out the debt value?
Yes, sir.
If I apply this over here, can I find out the fixed assets?
Yes,
So once I get these things, automatically I can go and find out the turnover and I can do the inventory, everything one by one. Yes or no?
Yes,
So I will not solve this problem. I will give you 5 to 10 minutes of time. Solve it yourself. Your 5 to 10 minutes starts now. Please do it. Alright friends, are you all done writing this? Did you get the answer in your books now?
Yes,
This one area I don't need to discuss. It's up to you. You have to solve it and complete this part. So I think we are done with this question also. Any doubts you have for me to check over here, let me know. It's straightforward. Am I right? Apply the ratios, you get the answer. Am I right? Okay. So friends, let's go to the next question now. Okay. Friends, question 2A is again a capital budgeting question, and this is similar to the question that we did in RTP. What did we do in RTP? Everyone tell me. We had an old machine. Here also you have an old machine. Now he is having some 5,000 units capacity. You can replace it with a new machine. So now they have given the new machine capacity. Investment is 100 crore at the end of the 5th year, etc., etc. So friends, since I am running a little bit short on time, can you do this question yourself?
Yes, sir.
Okay, I'll just go to the next problem, which is a very good question in MTP, and with that we are done with the MTP problems. Okay, question number 3A. Everyone write down working note number 1, basic data. Basic data. RAM evaluates all its capital projects using a discounting rate of how much percentage? So write down point number A, WACC. WACC is equal to how much, friends? 60%. Its capital structure consists of equity share capital, retained earnings, bank term loan and debenture redeemable at par. So debentures are redeemable at par. Write down point number B. Debentures are redeemable at par. Point number B. Debentures are redeemable at par. Then they have told rate of interest on bank term loan is how many times that of the debenture? 1. So write down. So interest on term loan is 1.4 times of interest on debenture. Can we say the debenture interest is X over here? Write down point number C. Let us assume the debenture interest is X. Debenture interest is X. Next point, therefore, bank interest will turn out to be 1.40x. The remaining tenure of debenture and bank loan is how many years? 4 years and 6. So write down the next point. Remaining tenure of debenture. Remaining tenure of debenture. Liana, I missed your message. I'll get back to you. Okay. Remaining tenure of debenture. What is the remaining tenure of debenture? Everyone tell me. 4 years. Then you write down remaining tenure of bank. Remaining tenure of bank, that is equal to how many years? 6 years. Now they have given you the book value of equity. Okay, so write down the next point. Book value of equity. Book value of equity. How much is the book value of equity? 20 lakhs. Next point. Retained earnings. Retained earnings. How much is that? 30 lakhs. Next point. Bank loan. Bank loan. What is the bank loan amount? 30 lakhs. No, not 30, it's 20 lakhs. Next one, book value of debenture. Book value of debenture. How much is that? 30. Next point. Current market price of debenture. Current market price of debenture. Everyone tell me what's the current market price of debenture? 98 rupees. Fine. Now they have told the PE multiple stands at how many times? 4 times. So write down the next point. PE ratio 4 times. PE ratio 4 times. Friends, have you learned the formula? 1 divided by PE ratio will give you what? Rate of on retained earnings, or can I call it as KE? So 1 by PE ratio actually gives you your KE. Okay, so here can I say if I do 1 divided by 4, what will be your KE that you get over here? 25%. So write down there itself the next point. Therefore, KE is equal to Thank you, Srihari. The mic had fallen down. Thank you so much for reminding me. So, KE is equal to 1 divided by 4, that is equal to 25%. Equal to 25%. All right, friends. Are you all done writing this in your books now? Okay, now. So I think from this data, they want you to calculate the rate of interest of bank loan, rate of interest of debenture, and they have given you a tax rate of how much percentage? 30. So write down the next point. Tax rate is equal to 30%. Tax rate is equal to 30%. All right. So we are done writing the basic data. I'll give you 1 minute, read through the basic data and think what are the hidden information that you can find out. Alright friends, time's up. Everyone look up. Let's read again. How much is the WACC they have given in the question, friends? 16%. What that means is, can I say 16% is nothing but KE into weight of equity plus KD into weight of debt? Yes or no? Here you have KE into weight of equity plus KD into weight of debt plus K of reserve into weight of reserve plus K of bank loan into weight of bank loan. All this together should turn out, am I right? So I'll just put a table so that you understand this better. Particulars, cost, then I will write down book value. From this book value you can find out the weight, and once you get the weight you can find out WACC. So you have equity, you have reserve, you have debenture, and then you have bank loan. Everyone interact with me. I think cost of equity we already found out. How much is the cost of equity? We got the answer as 25. Reserves also will be the same thing, 25%. Debenture interest I don't know. What is the book value that they have told over here for equity? 20 lakhs. What about reserves? 30 lakhs. What about debenture? 30 lakhs. What about bank loan? So total will be 100 lakhs. So can I say the weights are going to be 0.2, 0.3, 0.3 and 0.2. So 25 into 0.2 will give you the answer as 5%, and here you will get the answer as 7.5%, and remaining 2 I should find out. My overall WACC is going to be how much? This is what I should get. So for that I should find out what is this. I should find out what is this. Please put this table in your books, all of you. Are you all done writing this in your books now? Can I go to the next one? Okay. So now once you get this answer as 16%, we need to find out how much is going to be the interest on debenture and interest on the bank loan. So everyone now interact with me. Let's everyone interact with me. First thing, bank loan. Did we consider the bank loan as 1.40x? That is pre-tax or post-tax? Pre-tax. So from this, what am I supposed to do? I should reduce 30% to get my after-tax cost of bank loan. How much is that turning out to be? Do you get the answer as 0.98x? So here you will go and write down 0.98x. Please write down this in your books now. Okay, let's do it. So friends, Armour LLP is a newly established startup dealing in the manufacture of a revolutionary product, HDHMR, which is a substitute to a conventional wood and plywood. It is economical substitute for manufacture of furniture and home furnishing. It has been asked by a venture capitalist for an amount of funds required for setting up a plant and also the amount of circulating capital required. A consultant hired by the entity has advised that the cost of setting up the plant would be 5 crore. So that's the first number. Can we write down that in our basic data? Write down point number A, investment. Point number A, investment. Point number A, investment. Alright. So what is the value of investment you get over there? 5 crore. Point number B, life. What is the life they have given over here? 1 year. Write down 1 year. Life 1 year. Yes. Then they have told units to be sold is equal to how many square meters they are going to sell every year? 3 lakhs. So write down units. Units sold. Units sold. Units sold 3 lakhs. Next point, selling price. Everyone tell me how much is your selling price? 1000. Selling price 1000. Friends, from this, can we find out the sale value here itself? Write down the next point, total sale value. Total sale value. Total sale value. So how much is the total sale value? Can you please tell me? 30 crore, is it? Okay, 30 crore. Alright. Now friends, they have told raw material cost is given as how much over here? 200 per square meter. So write down the next point, raw material cost. Raw material cost. Raw material cost 200 per square meter. Okay. Alright friends, next one, what labor cost? What about the labor cost they have told over here? 50 rupees per hour. ₹50 per hour. Next point, labor hours per square meter is also given. How much is the labor hours per square meter? 3 hours. Everyone tell me, did you get the answer as 3 hours over here? Okay, fine. Then they have told cash manufacturing overhead is how much? 75 per machine hour. So there are two types of hours. Labor hour is different, machine hour is different. So write down the next point. Cash manufacturing overhead. Cash manufacturing overhead. Overhead 75 rupees per machine hour. Per machine hour. Is that turning out okay? I think you have done with this. Okay, next one. Machine hours per square meter is how much? 2 hours. Machine hours per square meter is 2 hours. Then selling and administration overhead. So you can put it as selling overhead. Selling overhead. How much is the selling overhead they have told over here? 250 rupees per square meter. Not done. We'll continue reading. Being a new product, the firm will have to give a longer credit period of how many months to its customers? 3 months. So write down the next point, credit period. Credit period is going to be 3 months. Then they are saying it will maintain a stock of raw material equal to how much percent of annual consumption? 3%. Okay, so write down the next one. Closing stock of raw material is equal to 50% 15% of annual consumption. %15 of annual consumption. Based on the negotiation with the creditors, the payment period has been agreed to be how many months from the date of purchase? 1 month. So write down credit period. Sorry, not credit period, creditors payment period. Creditors payment period. Creditors payment period. So what is the creditors payment period that you will get over here now? Do you get the answer as 1 month? Cash and bank balance to the tune of how many lakhs is required to be maintained over here? 25 lakhs. Okay, so write down the next one, cash balance required. Cash balance required. Alright friends, are you all done writing this in your books? Okay, I think till here we'll first do it. The next part is about changing the credit terms, etc. that we'll read it separately. Let us first understand till here. I'll give you 1 minute, read through the basic data till here, understand the question, then we will find out the hidden information one by one. Please go through it friends. Alright friends, now listen carefully. We have got the sale in square meters. How much is the sale in square meters? Everyone tell me. 3 lakh is the sale in square meter. Am I right? Okay, I'll just go down. In costing, you would have learned something called as functional budget, where you have a sale budget, production budget, raw material consumption. From raw material consumption, you get raw material purchase and labor. Same way here also, we have to first do those steps. Only then we can prepare a proper cost sheet over here. So friends, I will write down, you can write down working note number 2, analysis. In that you write down Roman number 1, production budget. Do you know the formula for production budget? Sales are given. How much is the sales given over here? 3 lakh?
3 lakhs.
Is it exactly 3 lakhs? Okay. 3 lakhs. To this sale, if I add closing stock of finished goods minus opening stock of finished goods, will tell me how much I am going to produce. In this question, finished goods is going to be how many months of sales have they told over there? 2 months of sales have they told like that? So it will be 3 lakh into 2 divided by 12. So can you tell me how much will be your closing stock of finished goods? 50,000. Have they told anything about the opening stock friends? I think it's a newly started company, right? It's a newly established company. If it's a newly established company, will they have an opening stock? No, they will not be having an opening stock. Are everybody clear with this part now? Okay. Wait. All right, friends. Let's continue once again now. So, hold on. Fine. So we have reached here, right? 1 minute. What were we doing? Yes, production. So opening stock is going to be 0. So now tell me what will be your production that you are going to have over here? 3,50,000 square meters. Please write down this in your books. Alright friends, are you all done writing this in your books now? Okay. So once you are done with this, after we do a production budget, what is the next budget that we prepare over here friends? We prepare the raw material consumption budget. So what is the production that they have told over here that we got over here now? Is it 3,50,000 square meters? For consumption per unit, nothing has been mentioned over here. So we will assume it to be 1 square meter for every 1 unit of finished goods. If that is the case, how much will be your raw material consumed over here? 3,50,000 square meter. To this, if I add closing stock of raw material minus opening stock of raw material, automatically what will I get over here, friends? I will get the purchase of raw material. Okay, these are all learnt in your costing class, but they have applied all that concepts over here, unfortunately. So now tell me, how much have they told as the closing stock of raw materials? Everyone tell me. 15% of the annual consumption. So it will be 15% of what? 3,50,000. How much is 15% of 3,50,000? Do you get the answer as 52,500? Opening stock again over here will be 0. Okay, so tell me now, if that is the case, what will be your purchase of raw material? 4 lakh? 4,02,500. Now tell me, how much is the purchase price that they have given in the question? Is it 200 rupees per square meter? So can you tell me what is 4,02,500 into 200? 8 crore 5 lakhs. I believe all of you are clear so far. So we got the raw material consumption budget also, we got the purchase amount also, we got over here, correct? Next one, Roman number 3. Can I also find out what will be my raw material closing stock from this data now? How much is my raw material closing stock that we already found out over here? So it is going to be 52,500 square meter into how much, friends? 200 rupees per square meter. So now tell me what is the answer you get over here? 1 crore 105 lakhs. One crore 5 lakhs. So friends, we got the sales budget, we got the production budget, raw material consumption is done, raw material purchase is done. Now what is the last budget that is supposed to come over here now? Labor budget. Now write down the next one, labor budget. Everyone interact and tell me what is the production that we are doing over here. How many units are we producing? 3,50,000. What is the labor hours per unit they have told over here? 3 or 2? Sure, right? Or 2 is for machine hour, is it? Okay. So that will be 2 hours, 3 hours. So what is the total hours that you get over here? 10 lakh 50,000 hours. Am I right? And what is the rate they have told over here? Rate is 50 rupees per hour. From this, can I find out my total labor cost? How much will be my total labor cost? Do you get the answer as 5 crore 25 lakhs? Five crore 25 lakhs. Everybody done writing this in your books now? Okay, so we got the labor budget also. I think now same way we can go and prepare a machine hour budget also, right? Because that will also be required is what I understand. Machine hour budget. That is how many hours, everyone tell me? 2 hours. So here the production is again turning out to be 3,50,000, and over here your hours is turning out to be how many hours? 2 hours. So when you do like this, what is the answer that you get over here? Do you get the total hours as 7 hours? That's what I meant, 7 lakh hours. I don't think they have told you anything about the cost. Have they told about the cost over here anywhere? 75. Okay, cash manufacturing overhead is 75 per machine hour, is it? Okay. So 75 rupees per machine hour is your cash manufacturing overhead. ₹5 crore 25 lakhs. All right, friends, everybody done? Can I go to the next part now? Okay, once you're done with this, now I can confidently prepare a cost sheet. Tell me, friends, what is the what is the format of cost sheet? Do you know? Please tell me the format of cost sheet. Direct material, direct labor, hold on, prime cost, am I right? Prime cost, little bit stucking, is that okay? Is it normal? That's all? Okay. Prime cost, then what will you have? Factory overhead, factory cost, am I right? After factory cost, what happens over here is that factory cost, then you have administration overheads, am I right? But here I don't think they have given you any administration overhead. Then you get the cost of production. Here you will go and do what? Add closing stock of finished goods less opening stock of finished goods. Once we do that, then we get the, then you call it as multiple terms. I call it as cost of goods sold. Cost of goods sold. From cost of goods sold, then what will happen? You will add selling overhead. That's exactly what I meant. Normally we add closing in the budget. Here it is the other way around. Okay. I was checking if you are sleeping or not sleeping. Then you have cost of sales. After cost of sales, what will come over there? Profit, and finally what will you get over here? Sales. Now tell me, how much is the direct material that you got over here? 8 crore is the purchase. In the cost sheet you show the raw material consumed 7 crore. Okay. So I'll call it as 700 lakhs. What about direct labor? 5? Is it 525 lakhs that you got over there? Please go and search. 525 lakhs. So your prime cost will turn out to be 1,225. Am I right? Okay. How much is the factory overhead we just found out? Again it's 525. Okay. So now tell me what will be your factory cost? 1,750 lakhs. Am I right? Okay. From this 1,750 lakhs, administration overhead nothing is given. It will be 1,750 lakhs. 650 is it? No, 750 is correct. That's what I meant, friends. My brain is also saturated now. Yeah? 1,225, 525, 1,750. So you get 1,750 lakhs. This 1,750 lakh is for how many square meters produced? 3,50,000. Closing stock is how many months? Did we find out the closing stock earlier of finished goods? How much did we get? 50,000 was only in units. Am I right? So this 50,000 we have to now do what? We have to take the cost per unit over here. Correct? Okay. So where I'll do that in the next page. I'll just come down and write down over here. Closing stock of finished goods. You can write down this afterwards. Okay. Please interact with me. What is the total cost of production that we got over here? 17.50 crore. Am I right? What is the total production that you have at this point? Is it 3.5 lakhs square meter? So now tell me, what is the cost per unit that you get over here? Is it 500 rupees per square meter? Correct. Now tell me, how much is your closing stock? 50,000 square meter. Am I right? Therefore, can you tell me what will be your total closing stock of finished goods value? Do you get the answer as 250 lakhs over here, friends? I'll give you time to write down that later. So that will be less closing stock only, right? Correct, yes. 250. $250 lakhs. Opening stock over here is going to be 0. So once this is 0, what will be your cost of goods sold? 1,500 lakhs. How much is the selling overhead already told in the question? 250 per square meter. So tell me, friends, here what will be the formula? 250 per square meter into how many lakh square meters? Only 3 lakhs. Why? Because now you don't have any more production. So I think that will give you 7.5 crore or 750 lakhs. So do you get 2,250 lakhs as the cost of sales? And we got the sale value as how much? 30 crore we got earlier, correct? So what is going to be my profit over here? 750 lakhs. This is the first challenge. Please put this in your books. Alright friends, I believe you are all done writing this in your books now. Okay. So I think once you are done with this part, let us read the remaining part of the question now. Okay. I think we are done till here. Now they have told that we have to give a credit period of how many months over here? 3 months. From this, can I find out the value of sundry debtors? Write down the next Roman number. Which was our Roman number right now? 6, is it? Okay, then put Roman number 7. Okay, debtors. So total you are having, if I am not wrong, 3,000 lakhs. Am I right? Of this 3,000 lakhs, how much is a percentage of debt? 3 months credit? 3 by 12. So once you do like this, what is the value of debtors that you get over here? Do you get the answer as 750 lakhs? Please write down. This question only step by step solving is the best method, friends. Alright. I believe you are all done. Okay, next part. After debtors, what is the next thing they have told over here? Maintain stock of material 15% of the annual consumption. I think that's already covered, right? Okay, then we took creditors payment period has been agreed to be how many months? 1 month. So creditors payable. Or here, how much is the purchase value that we found out over here, friends? Did we get the value as 805 lakhs? And creditors are going to be 1 month. So what will be the formula for that? 805 lakhs into 1 divided by 12. So tell me what is the answer you get over here? Is it 67 lakh 8,333? Please write down. Like this, step by step is the only way you can solve these problems. Alright, can I go to the next part now? What else have they told over here? Entity will hold finished goods. All the other expenses are to be paid 1 month in arrears. All the other expense. Everyone tell me. Now we spoke about material. Apart from material, what are all the other expenses that they are talking about over here? 1 minute. I'll put other expense. So what are the other expense you have? Labor you have. How much is the labor expense? Can you tell me? Was it 525 lakhs? What is the other one? Manufacturing overhead. How much is the manufacturing overhead? 525. Any other expenditure? Selling. Selling is how much? 750. Add up these three. How much do you get? Yeah. Yeah. While calculating cost of sales, that's because the requirement is asking. That's why you're saying that, right? Generally, while calculating working capital, there are actually two theories are there. I'll come to that part. One theory is that you do it on the sale value, because if I sell for 1 crore, if my debtors is 3 months, 1 crore into 3 by 12 is going to be my actual fund blocked. That is my real debtors coming in the balance sheet. But in some cases, for a conservative approach, what they do, they don't take the sale value. Instead, they take the cost of goods sold. So here the requirement is clearly asking cost of goods sold. That is the reason we are going to do it again. At that point, I will be reworking the whole thing. But when you do factoring, for example, you find out the debtors, you don't do it based on cost of goods sold, you do it based on the sale value, because debtors are actually based on your sale value only. Alright. Stock turn ratio also, when you do, you take the sales divided by stock also, cost of goods sold. These are two theories, that's all. Okay. Right. Everyone interact with me now. So what is the total that you get over here now? 1,800 lakhs. On this, 1 divided by 12. How much is 1 divided by 12 on this? Do you get the answer as 150 lakhs? Okay. Now friends, as he has told, in the requirement they are asking on a cost basis. So here only we can do one thing. We can work out the debtors also on what basis? On cost basis. So if you are doing it on cost basis, can you tell me what was the total cost of sales that you got over there? Is it 2,250 lakhs into what? 3 divided by 12. So how much do you get like that? 562.50 lakhs. This is on sale value basis. No. I'm writing something else. Okay. Don't mix up. What we did now is cost basis. Alright friends, are you all done writing till here in your books now? Okay. So once we get all these things, okay, we got the first part of the requirements are clearly available with us. From this, we can now go and prepare our working capital estimate. Am I right? Okay. So now I'll write down the next working note heading. Working capital estimate. So everyone tell me what and all will come in the working capital estimate. We will have to take our current assets and we have to take our current liabilities. Now tell me what and all will come as the current assets over here. Can you tell me? First, what will come? You have a raw material stock. Same way you are also having a finished goods stock. Then you are having debtors. And in current liability, what do you have? Oh yes, you have cash. Creditors you have, and then you have the expense payable. Here you will also have what? Cash. So tell me how much was your raw material stock, everyone tell me? 1 crore 5 lakhs. What about finished goods? 250 lakhs. 562.50 lakhs. 25 lakhs. 67 lakh 8,333, and this one was 150 lakhs. Alright, can you tell me the numbers now? What is the total of current assets that you get over here?
942.5 lakhs.
And what about current liability?
217.08333 lakhs.
Net working capital?
725.41667.
No, that's, if I'm putting in lakhs, this point will come. Okay friends, are you all done so far? So we are done with the first part of the question until here. Now can we read the next paragraph and analyze the next paragraph? Write down the next working note heading. Basic data for situation 2. Basic data for requirement or situation 2. The entity is also considering reducing the working capital requirement by using any one of the two options. What is option number 1? They are saying reducing the credit period to the customers, which will lead to reduction of sales by how much percentage? So write down point number A, option 1. Point number A, option 1. Alright, in option 1 you write down reduce the credit period to 2 months. They are telling it reduce it by a month means what? It will come down to how many months? 2 months. 2 months. And sales will reduce by 5%. And sales will reduce by 5%. Okay, next one. Engaging with a factor for managing the receivable. So write down the next point, option 2. Option 2. Appoint a factor. Option 2. Appoint a factor. Okay, inside that you write down subpoint number 1. Subpoint number 1. How much is the commission he will charge? 2%. So write down factoring commission 2%. Factoring commission 2%. And also he will be advancing how much percent of the receivables? So write down subpoint number 2. Advance 65% of the receivable. Advance 65% of the receivable at how much percent per annum? 12%. Then they are saying this will lead to savings in administration and bad debts cost. So write down the next point, point number C. Sorry, subpoint number 3. Subpoint number 3. Savings in administration cost. Savings in administration cost. Savings in administration cost will be how much, friends? 20 lakhs. 20 lakhs. Next one, savings in bad debts. Savings in bad debts is going to be how much? 16 lakhs. So friends, now we have to analyze these two options. Shall we do it one by one? Okay, everyone interact with me. Earlier, how much was the credit period? 3 months. Now it has come down to 2 months. So my fund has been released for how many months? 1 month the fund has been released. Okay, so here I'll just go to the next page and we'll write down next to working note. Again you write down analysis of situation 2. Analysis of situation 2. Alright, in that you write down point number A. Point number A. Current debtors. Everyone tell me how much is your current debtors? That was 2250 into 3 by 12. Am I right? 562 50,000. Okay. Now tell me what is going to be your revised debtors? 2250 into what will come over here now? 2 by 12. How much is this into 2 by 12? 3? Is it 375 lakhs? So now tell me how much is the fund released? That will be A minus B. 187.5. Wait, there is a difference coming in over here.
5% decreases.
Okay, wait. When the sale decreases by 5%, selling price or sales volume? Sales means sales volume. So when the sales volume decreases, your material cost will also decrease. So we have to prepare a separate cost sheet for that first, I believe, right? Fantastic question, friends. Keep this pending. We got 21 lakh 37,000. Come on, friends, take a deep breath and interact with me. Directly 5% reduce. Will you get exactly the same thing? Hold on. No, not like that. When your sales decreases means your volume decreases. So when your volume decreases, your material cost will decrease. Labor cost will decrease. Manufacturing overhead, if it is variable, it will decrease. Fixed cost ideally should remain the same. Okay, I'm not sure how they have done it. We'll just cross check that. It's 2250. Can you just tell me what is 2250 minus 5%? That's what they have done. So they have assumed that everything is variable. Fantastic. We will do it that way if that's the case. Okay. So you'll write down point number A, revised sales. Everyone tell me what will be your revised sales. Earlier it was 3000 lakhs. Into how much percentage? 95%. So what is 3000 lakhs into 95%? 2850 lakhs. Point number B, revised. What are we trying to find out here? No, first you are finding out the cost of goods sold, right? Yeah, cost of goods sold. So that will be 2000. Earlier, how much was the cost of goods sold? 2000. 2250. Now I will do this into what percent? Into 95%. 2137.5. Everybody clear? Okay. Now I will write down over here current debtors. Fantastic. What is the current debtors? 2250 into 3 by 12. Then I will write down revised debtors, that is 2137.5 into what? 2 by 12. Friends, here you can actually have different assumptions. So let's pray to God this doesn't come as an MCQ, because MCQ will have only one option, no? And you will get some other opinion, it will be very difficult then. So how much did you get as earlier debtors was how much? 5 lakh? 562.50 lakhs. And what about this one? 356.25 lakhs. So now tell me from this, how much is your fund released? 206.25 lakhs of your fund gets released. Okay. Now here only we can also find out one more thing, reduction in your profit. So So friends, earlier how much was your profit? Can you tell me? Was it 750 lakhs? Now this profit will also come down by 5% if that is the case. So how much is 750 lakhs into 5%? Is it 37.5? Okay. So this is indirectly again you paying an interest. So I will find out effective cost over here will be 37.5 divided by 206.25. So how much percentage will you get over here? 18.18%. Beautiful question, friends. The next one is beautifuler. Friends, such heavy problems may not come in the exam, okay? So far it doesn't come. So why are we doing is it? Relax. Let us finish this one at least. Next one we'll plan after this. All right. Are you all done writing till here in your books now? Okay. Can I go to the next part now? Imagine had I started my class with this question, none of you would have come back. That speed everyone would have left this class. Next one. Friends, we have to analyze the factor now. Analysis of factor. Analysis of factor. Now everyone interact with me. So when you speak about the factor, here point number 1, you have a advance receivable. 65% is the advance. So like we did in the previous question, can we do it over here, friends? Okay, so I'll write down. First thing will be debtors. How much is going to be your debtors in this scenario? I think you're appointing a factor means rest everything will be the same. The debtors will also be the same. How much is the debtors that you had in the earlier case? Can you tell me? 5 lakhs. From this, what are we supposed to do? We are supposed to reduce the factoring commission. Sorry, is there any reserve they have told over here? Any reserve they have told? No, nothing has been told over here, right? Okay, wait. They have not even reduced the commission here. They have flat taken the debtors and they have given the advance. So how much is the percentage of advance they have told over here, friends? Can you tell me? 65%. So it will be 65% of 562.5. There is nothing wrong if you do the earlier method that I taught you. What was the earlier method? Reduce the factoring. First, if the reserve is not there, reduce the commission, balance on that interest, reduce that, and then you give the advance. That is also absolutely correct. 12 into wait. My dear friends, take a deep breath. Here debtors are not taken on cost basis. Here debtors are taken on the sale value basis. Beautiful question. How much was the debtors on sale value basis? Can you tell me? Was it 750 lakhs? So now tell me what is 750 lakhs into 65%? 487.5 lakhs. Okay, 487.5 lakhs. Everyone please cool down. Please relax. Don't take tension. I will give you tips after this. Let this question get over first. Okay, 487.5. On this you will charge what? Interest. Interest is charged at how much percentage? Everyone tell me. 12% is per annum. Am I right? We are having a credit period of how many months over here? 3 months. Let's pray we get the same answer as per your RTP. How much is the interest you got? 14.625. 30 into 3 by 12. 30 into 3 by 12 is 750. 750 into 12%. Yeah, come again. What is the number you got? Please repeat once again. Okay, 1 minute. I think you're correct. Wait, I'll just remove this 3 by 12. What's the number you get? Yearly interest is this only, right? Okay, 14.65 is for 3 months. That is correct only. It's correct, friends. Okay, 58.5 lakhs. You just don't do 3 by 12. Earlier, why did we do 3 by 12 in the earlier question? Because we were trying to find out the amount of advance to be given. Here there is no such adjustments required. Directly you will get 58.5. Okay. Now tell me how much is going to be your factoring commission? How much percentage is your factoring commission? Everyone tell me. 2%. So it will be 2% of what? Of the total credit sales. That is 30 crore. So how much will you get over here in this case? Do you get the answer as 60 lakhs? So you get the answer as 60 lakhs. Okay. So now tell me, interest we found out, factoring commission also we found out. What is the total cost of appointing a factor? We can add up these two things, correct? Is that turning out to be 118.5? 118.50 lakhs. 118.50 lakhs. Now, what are the benefits of appointing a factor? How much is the administration cost savings you have told in the question? 20 lakhs and 16 lakhs. Can I directly add up and put 20 plus 16? So how much is the total that you get over here? Do you get the answer as 36 lakhs? That is also correct. So now tell me, what is your net cost? 82.50 lakhs. For this, how much is the advance received? We already got the advance earlier. I think no need to write down that again. You can directly put the effective cost of factoring. Effective cost of factor. Okay. So how much will that turn out to be? 82.5 divided by advance, that is 487.50 lakhs. So do you get the answer as 16.92%? Please write down this in your books now. Just one more requirement and we are done with this question, friends. Alright friends, are you all done writing till here in your books? So we are done with the factoring part also. Let's go to the final requirement of this problem. Write down the next working note. Basic data for situation number 3. basic data for situation number 3. Alright friends, the entity is also considering, my dear friends, please keep quiet. The entity is also considering funding a part of working capital by a bank loan. For this purpose, bank has stipulated that it will be granting how much percent of the current assets as advance over here? 75% of current assets. So friends, did we already find out the total current assets earlier? How much is the total current assets? Everyone check and tell me.
942.5.
Total 942.5 lakhs. Therefore, your working capital loan will be 75% of, wait, 725.41 is your current assets? Come again? Have they told net current assets or it's net current assets? Sorry friends, not total current assets. The word is net current assets. One word can make your life miserable. Okay. Now tell me friends, how much is the net current assets that you have? 725.41667 lakhs. Okay. So here it will be B into 75%. How much is B into 75%? Everyone tell me. 54406,250. This is the working capital loan amount. Can you please write down this in your books? Beautiful question, friends. Beyond this, no question can come for your exam. Liana, exam point of view, first of all, I don't think a question like this would come up. If it comes also, you can invest around 30 to 40 minutes maximum. That's because it will come for how many marks? I don't think 10 marks. MCQ, no? How much is the marks per MCQ? 2. So into 4 means 8. So you have decided to skip already. My dear friends, so much hard work. What I feel is they will take some variation of this question and they'll put it. Maybe they'll break down the question, take one part, or they'll put it in the exam. Because I'll tell you one thing, the moment your brain tells skip, ICI also understands that. So they will try to target that, but not in an elaborate manner. They will do some adjustments over here. So one time you do it, you will remember it. Then exam, once it comes, you will be able to cope it up. So are you all done writing this? 5 crore 44 lakhs. Final requirement, it is done. They say the bank has quoted an interest rate of how much percentage over here? With a condition of opening a current account. With it, it will require 10% of the loan amount to be the minimum average balance. What does that mean? No, not like that. Wait. See, read the last part again. Brain is stopped working only. This is easy. This question is easy. Just focus. See, bank has quoted how much percent interest over here, friends? 16.5% is the interest quoted by the bank. Okay. So if the interest is 16.5, ideally, if I take a loan of 100 lakhs, I should pay how much interest on that? 16.50 lakhs. But there is a condition that 10% of the loan amount has to go into what? Current account. So if I take a loan of 100 lakhs, how much money I should put in the current account? 10 lakhs. So how much money will I get in my hands? 90 lakhs alone. So I'll just say, assume my loan amount is how many lakhs? 100 lakhs. So how much interest I have to pay over here? I have to pay an interest of 16.50 lakhs. Am I right? Okay. But net loan received. How much is the net loan received in my hands? 100 lakh minus 10, or that is equal to 90 lakhs. From this, can I find out What will be my effective interest over here? So I am have to pay 16.5 lakh of interest only on 90 lakh received. What is 16.5 divided by 90 lakhs?
18.3%.
Over, friends. This question is over. Write down. We'll skip the 7th question. You will not have that energy. Instead, we'll do a ratio analysis problem and we'll pack up our session. Okay? That question you will solve it yourself. For that also brain not working. Perfect, friends. Are you all done writing this? Now, come on. The purpose of this question is starts now. Everyone interact with me now. Look up. Anticipated profit of the plant is how much? How much is the profit that you found out earlier? Come on, tell me. How much? 750 lakhs. Estimated current asset requirement in the first year. Debtors calculated at cost. That is the reason we do it at cost. Otherwise, debtors is always supposed to be on what? Sale value only. Okay. So now tell me, what is the current assets that you got over there? 942 lakh 50,000. Net to working capital. How much is the net to working capital that you got over here, friends? 725. Next question. Annualized percentage cost of the two options for reducing the working capital. Friends, we did debtors also, we did factoring also. Debtors, how much was the percentage that we got over there? Can you tell me? 16.92. And how much for the other one? 18.18. So can I say this is the answer? Okay, 1. Last one. What is the maximum permissible finance by the bank? What is the answer you got for that? Can you tell me? 544.06. Okay, and did we get the interest as 18.33%?
Yes, sir.
Yes. So with this, we are done with this massive question, friends. All right. Let me now share one small story over here. Normally, which I share at the end of the class. Have you heard of a person called as Muhammad Ali? Who is Muhammad Ali? He is one of the greatest boxers that the world has ever seen. Friends, Muhammad Ali started boxing at the age of 16. At the age of 23, he reached the finals of his heavyweight championship. And when he reached at that phase, that is when people noticed him. 8 years effort, nobody knows. One performance and he became a superstar. When he went for the final match in the ring, that time he had an opponent standing next to him who was unbeaten for the last 3 years. So that is the time when Muhammad Ali is going to fight against him. So friends, normally when anyone walks to the ring, they just come walk and they start fighting. Muhammad Ali was different. He never walked to the ring. He will start jumping left and right, walking, and he will keep on screaming, I am the greatest of all times. I am the greatest of all times. And then only he will enter the ring. After entering the ring also, he is a very restless fellow. He will never stop walking or stop talking. He will go on talking. He is a very talkative guy. He will look at the opponent and go on. He will start talking to him and tell him, come and fight me. I will break you down. Come and fight me. I will break you down. Then friends, when the match started, everybody thought this fellow is only doing show off. But friends, when the match started, Muhammad Ali actually did a beautiful performance. One is when somebody hits you, you should be able to protect yourself. 2, you should be able to hit back. Round number 1, Muhammad Ali did not hit the opponent. He was teasing the opponent and the opponent was trying to hit him. He was so good at his reflexes that he was just moving his head and the other fellow was not able to hit him. That was actually frustrating the heavyweight champion. So first full round he was teasing him. Is this all that you have got? Nothing more? Come on, try hitting me, try hitting me. Third round he started hitting back, friends, left and right. By the time he reached 7th or 8th round, he actually beat the opponent by way of knockout. What do you mean by knockout? Other fellow fell down. Counted till 10. He could not get up. That is the day when Muhammad Ali became a superstar. 8 years efforts nobody saw. That one day, one performance and he became a superstar. That is when somebody asked him a question. Mr. Ali, how many sit-ups do you take every day? So when normally this question is asked, we can give a reply that I take 10 sit-ups, 50 sit-ups, 25 sit-ups, 100 sit-ups, etc. But Muhammad Ali gave a beautiful reply. He said, I do not count my sit-ups. I start counting when it starts paining, because that is when it really matters. So what he said is absolutely right. If others do 50 sit-ups, he is also doing 50 sit-ups. Will he have any value? Others do 50 sit-ups. He does 55 sit-ups, just 5 sit-ups extra compared to what others do. That is when he actually creates a value for himself, because that is when it starts paining, and that is where you create an extra value for yourself. Start counting when it starts paining, because that is when it really matters. This rule is applicable not only to Muhammad Ali, this is applicable to each and every one of us sitting over here. If everyone studies for 5 hours, you also study for 5 hours, will you have an extra value? Everyone studies for 5 hours, you give 5.5 hours. That extra 30 minutes is what creates value for yourself. If you do the same thing that everyone does, you have no value. But if you do something what others cannot do, that is what creates a real big mileage and value for yourself. This one question is a classic example of that, friends. The moment you come to this question, first your brain will tell you what? Skip. That time you should change in your mind and tell start counting when it starts paining. Because if others don't do this, you do this. Friends, this one question, how many adjustments we covered, did you observe that? Raw material requirement. We learned sales budget, production budget, purchase budget, consumption budget, labor budget. After that, working capital requirement, closing stock calculation, debtors based on cost, debtors based on sale value. Then we have more. I only forgot the question here. So many adjustments are there. Am I right? So when you do these kind of questions, you get used to working out heavier problems. Exam hall, when you see easier questions coming in, your brain can actually tolerate them. And let me tell you one more thing, friends. Nothing in life is difficult. Nothing. This question we are doing for the first time. How much time it took you to do it? 1.5 hours, is it? Fantastic. It took us almost 1.5 hours. But there is a theory called as learning curve. You will learn at the CA final level. Learning curve says that how much time it takes you to do for the first time, when you repeat it again, time comes down to almost 60%. That means next time you work out this question, how much time it will take you? Around 45 to 50 minutes. Once again you do it, you can do the same question in hardly 20 minutes of time. Friends, your inter-FM question paper or CA final, I take classes for CA final also. AFM paper 3 hours. Normally if all the students write, they take around 3 hours, 3.5 hours to finish it. Alright, I do the same answer sheet, I can complete in 1.5 hours the same question paper. Why? I repeat, do it again. Last 10 years this has been my life. So that expertise is required to score maximum marks in any subject. FM especially because it's a logical paper. Concepts has to get inside your brain. Once concepts are inside, you don't have to learn anything. It will automatically come. Are you clear, friends? So my request to all of you is that some questions will look tough. You will feel like skip, but don't skip those questions. Make sure you do it, because those questions will give you extra value. And trust me, if a question like this comes in the exam, 10 people's paper I am correcting, 9 fellows left. Your paper comes in front of me. You have written it correctly. Imagine the respect I will have for you. I will give you full marks for this question, extra marks for the next question also. Yes or no? Correct or no? That is how the mindset works. Do something unique what others are not able to do it. Are you clear, friends? Shall we now do one final question and pack up our session for today? Yes? No?
Yes, sir.
You're all tired?
Yes, sir.
Okay. Will you do this question as homework in that case?
Yes, sir.
So what are the homework questions? One question only, ratio analysis is pending. It's not a very difficult problem. Okay, tell me. Okay, we'll just discuss the conceptual part. Okay. Here they have given you shareholders funds. What do you mean by shareholders funds?
Equity
plus reserves. Okay. Then what about GP margin? What is the formula? Divided by sales. What about net profit margin? Divided by sales. What is PBIT to PBT? This is financial leverage. Am I right? Credit sales to total sales is 80%. So that means how much is your cash sales over here? 20%. Everybody clear? Asset turnover ratio. Turnover divided by assets. Okay. Inventory turnover ratio. They have told use sales as turnover, not cost of goods sold. Everybody clear? Average collection period. What is the formula for average collection period? No. How do you? What is the formula for average collection period? Debtors divided by sales into 360 would give you the answer as how many days? 30 days over here. Current ratio, what is the formula? Current assets divided by current liability. Operating expense is directly given as how much? 60,000. Long term debt to equity 40. That means 40 is debt and equity will be no. Debt to equity. So debt divided by equity is equal to 40%. So if equity is 100, debt is going to be 40. So it is 40 is to 140 is going to be the ratio over here. Taxes they have given you as 0. So once you put it like this, solving becomes very easy. Formula wise you go solve it and you can just clear it from the exam point of view. Alright friends? Yes. I will now just take 5 more minutes of yours to tell you how to plan your one day before the exam. Now tell me friends, what are the chapters that you have in Inter FM? Leverages. Oh wait, I think I should just call it as leverage, not financial, only leverage. Okay, then you have ratios, working capital management. Okay, you have cost of capital also, you have capital structure also, correct? We'll put cost of capital here. I will put capital structure over here. I will put, okay. Investment decisions, again I'll put it over here, okay. Dividend policy or dividend decisions. Working capital is done. I think all the chapters are covered here. Okay, friends, exam point of view, these chapters give it more importance. Why? Have you learned something called as Pareto analysis? No? ABC analysis?
Yes, sir.
In your costing? What does the Pareto analysis tell you? 70-20-10 rule or 80-20 rule? What is the 80-20 rule? You don't know? Okay, I will tell you. Friends, your 80% of your marks normally comes from 20% of the chapters. Okay? But in CA it's not 80-20, we can call it as a 60-40 rule. Your 60% marks are going to come from the 40% of the load driven topics. So that is these areas. Alright. Ratio analysis, once you know the ratios, exam, even if you go without studying, you should be able to answer it, provided you know the formula for all the ratios. Then it is a skill over there which you need to apply. Leverages is a very easy chapter. Only one time last year they gave a deadly question, and that question was actually incorrect also, because we can get multiple answers for the same question. Apart from that, normally leverages are going to be very easy. So you have to focus on this, because this chapter will get over in hardly 1 hour. But exam point of view, you are scoring easily 4 to 6 marks over there in that one question. Then comes ratio analysis. Okay. Again, as I told you, just remember the ratios. Then exam, whichever question comes, you will be able to crack it. Suppose by chance you are not able to complete it, even then you will be able to do at least 75% correct for sure. Maybe 1 or 2 ratios you would have got stuck. So out of an 8-mark problem, scoring 6 marks over there is absolutely achievable. It is not at all difficult. Alright. Third one is what? Working. This is a little tricky chapter, but it's a very good chapter. Okay. Once you know the concept, how the debtors fund blocked, or factoring the way I showed you with that that Kamal Hassan or whatever example we took over here. Once the logic is clear, exam point of view, it is not very difficult, and the question doesn't come the way we did now. Normally they will only ask for either working capital estimate, that will be a very straightforward problem, or they will ask for inventory driven question or EOQ, square root of 2AB divided by C. Things, easy questions like that only come from working capital, and score wise easily 8 marks scoreable. Okay, what is the next thing over here? Friends, if you know the logic of KE, KD, KP, okay, this chapter is very easy because you have only redeemable preference shares, irredeemable debt, irredeemable debt. So formula is the same. Debt you have taxation, preference share you don't have taxation. Rest everything is the same. So you can again score more marks in less time over here. Dividend policy also very easy chapter. So these chapters if you learn friends, almost your 70% of FM marks, or I can even put it to an extent of 80% comes from here along with theory. In the end, you give time for these two chapters. Investment decision is easy, but the problem is it's time consuming. Every one question you do, it might take 40 minutes, 45 minutes, etc. So you choose a set of 8 or 9 questions which you work out once, make the adjustments clear. One day before the exam, only read through these questions. Alright. So that way, exam hall, this question, how much ever you try, maybe you will go wrong. So you can expect a 4 out of 8 marks for this one question. Keep it that way. Capital structure, some people find it okay, but that Modigliani-Miller theory, that KEU, all that is very, very confusing because same thing they turn around. One place they will go and tell debt plus equity is equal to total. Other place they will tell no, not like that. Total is net operating divided by KO and other one is minus. They will create confusion for the same thing turning around. So that part also, even if you don't, spend too much time here, you can expect a 4 out of 8 for this problem. But these areas if you do properly, you cover 80% in the limited time. That way you get the best. And friends, if you want to score good marks in the exam, you have to practice. Practice means you have to work out without looking at the answer. Okay. Today we did RTP and we did MTP. So we covered a lot of questions. Ideally, you should sit in an exam atmosphere, write the exam, doesn't matter whether you pass or you fail. What matters is write the exam without looking at the answer book. 2 hours sit and write. Then you evaluate your paper. That skill majority students lack. If you have that skill also, trust me, easily you will score 10 marks more per paper. Because when you are writing an exam, you are studying. You are not only studying, you are studying in an exact result oriented manner. That is ultimately, that is the objective of studying so much, right? You should go and you should be able to write the exam. And this time you have one more new thing. What is that? MCQ. That's the reason I have created 3 mock exams and 3 MCQs. Please make sure you write these exams. Don't think whether I will pass. Okay, I'm very worried. Let me study for one more week and do. No, write. It's okay if you fail. Write the paper again if you're not cleared. Second time when you write, you will get that marks, and that is when you will know, okay, this is how I am supposed to score marks in the FM paper. Okay, I hope I have covered all the points. If you have any doubts at any point of time, you can get in touch with me. I will be working along with you. You can note down my number. When I'm installing the app or when you have any doubts, you can always message me on this number. All right, friends. So shall we pack up our session with this now?
Yes, sir.
All the very best. Write your exams well. Any support needed, let me know. Thank you so much. Have a nice time ahead. Thank you.